Welcome everybody. Give it a few minutes here to let everybody get joined and situated.
What's up, Hostel?
How's it going?
Pretty good.
Cool.
Good. How about yourself?
I can't complain. We
Right on.
avoided that storm that passed through Texas and Georgia and those other places. It kind of split up and went around where I live, so we got lucky. Andrew, what did I have at Chipotle? I had a burrito bowl. My wife had 3 tacos, and we had some chips and queso.
Chronic.
That sounds bomb.
It was. And I have to always have my smoked Tabasco, or the burrito bowl just isn't the same.
Right on.
Oh man, I've never tried that.
Oh, it's fire. Oh my God.
Smoked Tabasco.
Smoked Tabasco. They have well, normally it's like in bottles, but they've got them in like little plastic cups to give you if you wanted it.
Yeah. I'm usually not a fan of Tabasco or the hot sauce.
Do you add guac to it?
Um, I don't add guac. My wife likes the guac, so I get it for her, and she typically just eats it with the chips.
Hey, how's it going?
Pretty good,
Man, we're starting off with some very important questions.
right?
Been a while, man.
Yeah, welcome back.
Thank
All right,
you, sir.
so
Thank you.
I think we can probably get started here shortly. I'm just looking for one person that I told specifically that I would go over this wheel strategy. So let me just DM them, see if they're here or not. If not, we're gonna get started.
Did you get hurt today, or you're not worried?
I'm not worried about it.
I got crushed, but whatever.
I didn't get killed as bad as the first drop. That was like my portfolio went from 105 to like 92. Now it's back up
Okay.
to like, it went up to 106. Now it's back down to like 104. So I mean, I'm still making money. So
Yep. That's just how
I
it
got a
works.
question.
give me 1 sec on the questions. Let me just send a DM to this person, and then
Sure.
we can get started.
Okay.
Tell them to be more responsible.
Well, maybe they're just busy. Maybe they're at work. Who knows?
Nah, I'm just kidding.
Hey, I just want to confirm that there's no video up yet. I'm just staring at a homepage slide.
Yeah. No, there's no video.
Okay, appreciate that.
I will share if I have something to chart or an example or something like that.
Well, if you
Perfect.
watch the YouTube stream, you can see whatever you're looking at.
Yeah, that's my my YouTube stream thing. I've got it. My YouTube stream. I've got just looking at my one of my screens. So that's a way to always see what I'm looking at. Get on the YouTube stream.
That's how I've been doing. I've been kind of
Is that link in the live class? Did I miss that?
Yeah, they're both there. Both links are there.
Copy.
Man, you got me craving Chipotle now.
Sorry.
Nah, you're good.
Okay, so I'm not getting a response, so we'll get started. So I told folks that I would go over the wheel strategy again. It's not it's not a simple strategy. It's multi-pronged. I call it a sectional strategy in a way, right? Because you're gonna be in your position in sections. You're not gonna be able to do the whole entire strategy in one go. Things have to happen for that to be the case. So the basics of a wheel strategy are basically a cash secured put and a covered call. And before I get into this, actually, the person that had the question, let me go ahead and take care of you. So please speak up with your question, and then I'll.
Yeah, so thanks. My question was actually, this is my first week in the class, and if it's possible for you guys to go over to the basic ones, like how to get a contract option, like call contract, how to buy it, and how to sell them back. And also, I wanted to know, how can I check on the profits?
So what broker are you using?
I'm actually using eTrade.
Okay, so E-Trade, I don't do E-Trade, so I can't tell you how to get in and out of positions on that one. I can help you with technical analysis, charting, questions along those lines. Stock Daddy, one of our analysts, he uses E-Trade. I think he'd be the perfect resource for you as far as E-Trade goes. But any other questions outside of that, I can help you.
But I believe they're all the same concept. I mean,
They
when
are,
it
they
comes
are.
together.
Um,
Yeah, so if you
but
could go through those.
I would say it's broker specific though, right? So on Thinkorswim, if I want to get into, let's say I want to buy an option, right? I'll just right click it, touch single, right? But for like Schwab, I'll have to go into the broker and touch BTO, and then do I do a call or a put, and then which strike and all that. So it's broker specific, and like I said, I can generally tell you how to do it, but I think it's important for you to understand how to do it on the broker specifically, because that's when you use it. Now, if you're using Thinkorswim or Schwab, I can easily show you, right?
I have Thinkorswim too. So yeah. So another question was, when we buy a contract, do we have to pay for the whole stocks? Like each contract comes with 100 shares, right? In it. So do we have to pay for all those 100 shares, or we can only pay for the contract fee, whatever it is?
You're
And then
just
when
paying
we
for the contract.
and then once, like, in which condition we have to pay for the whole shares and everything for
You
all
don't.
those 100
You can choose to pay. It's a
if I want to
choice.
keep it?
Yeah, it's a
Okay.
choice. Yep. It's like
And then how?
honestly, the only time you'd want to keep something is, let's say, um, you got a 90 strike or something, stock price goes to like 92 or 91, and your option is actually not worth very much at all. You could exercise that contract, take ownership of the shares, and then swing it, right? Sell it at a couple of dollars higher than the price you took assignment at, right? Or that you exercised it. So that's choice, and it's going to take some time for especially a new person to understand how to manage their position, right? So position management is very important, and
Got it. Thank
there's
you.
there's a lot of different venues of discussion on position management, and it goes it's a rabbit hole. um, but I mean, I'm happy to go down the rabbit hole a little bit later. What I wanted to do was go ahead and talk about the wheel strategy for those that wanted to hear that. Does it,
Okay.
as far as your brief questions, did I answer your questions on those?
Yes, actually, I actually got my one of my main answers were like, I don't have to pay for the whole shares. It's only for the contract.
Right, right. Yeah.
Yeah.
And
That
let's see. Ashley said paper trade would be good to get started. I totally agree. E-Trades, I don't know if E-Trade has paper trade. I assume they do. They're one of the more well-known brokers, so I would assume that they do. Thinkorswim definitely does.
yeah, I have Thinkorswim. I've been practicing with that. So
I would do
yeah,
that
it's
instead,
actually
man. I,
working.
I would
Yeah.
avoid E-Trade. Not that it's bad or anything's negative about it. It's just, majority of us here use Thinkorswim. So if you had, broker questions and things of that nature, it's going to be a lot easier to provide a support to you, right? So I would say to stick with Thinkorswim. I mean, you've got on demand, which is a virtual trading. You've got regular virtual trading, which is like, um, you can trade today, whereas on demand is historic trading, so you can go back any day in history. I'm not sure how far back, but pretty far back, and trade the day as if it was a regular day. So Thinkorswim is definitely hands down the best platform in my opinion.
Got it. Thank you.
Okay, you're welcome. All right. So back to the wheel strategy. Excuse me. So again, the basics of this strategy are going to be a cash secured put and a covered call, right? And in this scenario, you're going to be an option seller when you open a position, right? So don't get that mistaken with the normal type of trading, because I know a lot of people, majority of folks on the server do mainly option buying, right? So make sure you understand the difference between buy to open and sell to open. If you don't understand that, then this description and explanation of a wheel strategy is probably going to confuse you. However, I've got videos of the wheel strategy as well with some examples. So, or one video rather. So I think that'd be also another good resource for those of you that may or may not be confused, and or whatever the case, right? Like let's say you're confused and you got to leave the chat or the Zoom session. You got to go do something, couldn't listen to it all. I've got a video for it, and you'll be able to watch this video over again, right? So again, going back to it, wheel strategy, cash secured put, covered calls, okay? So I'm gonna go through this. This is gonna be a crash course, and once I finish, then feel free to ask questions, right? So a cash secured put, I'm gonna sell to open my position. I'm gonna sell a put, right? So let's say I sell a $50 put, and the stock price goes, let's say the stock price is at 50 and it goes up, right? So let's say it goes up to $55. Let's say that $50 put that you sold paid you a $500 premium. There's a high chance that when that stock goes up to $55, that $500 premium position is probably going to be showing a net profit of around $200 to $300, right? And that could be same day. However, if it goes against you, right, you get the 50 put, it goes to 48, and you got a $500 premium. Near expiration, if it's still at 48, you're going to be seeing about $250 to $350 in profit, depending upon implied volatility, right? So let's explain two scenarios or outcomes to a cash secured put position. You're going to be in the position, and if it goes out of the money, which means you're at a 50p, it goes to a 55, expires worthless. You keep all the premium that, or majority, I'd say 95+% typically. You keep that premium, option expires worthless, you're done. If it expires in the money, however, at 48, well, your break even is 45 because you got a premium of $500. So you're still in profit. If, let's say, last day of expiration, it's at 48, you should be seeing, like I said, around maybe at this point, you'll see, 300 or 400, depending on IV. But in this scenario, if it expires in the money at 48, your break even is 45, you're going to be assigned shares, right? You're going to get 100 shares per contract. And at this point, once you do get assigned, this is the wheel strategy, right? So it goes from a CSP into a wheel strategy, right? It doesn't start out as a wheel strategy because to wheel it, you've got to be assigned shares. So once you get assigned the shares, you're going to want to sell calls on the strike you got assigned, right? So you got assigned a 50p. You're going to sell calls now on that 50p against those 100 shares, and you're going to take in premium for it. Now, in this scenario, again, you got two outcomes. Expires in the money, expires out of the money, right? Expires in the money, it takes your 100 shares, pays you what they're worth, and you keep the full premium that you were paid initially. If it expires out of the money, then you just keep the premium and your shares, right? Now, I'm going to go back to the CSP. Last day of expiration on a CSP prior to being assigned shares, you can, if you're at $40 on the stock price and you got a 50p, you can still exit that position day of expiration for profit. Same goes with a covered call. If you're in the money, so let's say you sold a 50p, you got a $500 premium, which makes your overhead go to 55. Let's say the stock price is at 52. You can exit that position on day of expiration for profit, 100% guaranteed. All right, I got indigestion. I'm over here burping and belching. See, I'm trying to think if I missed anything. Typically, when we sell options, we want high implied volatility. You get more premium for something that has high IV. Low IV, you want to buy options, right? So make sure you understand that. Buy to open a position is a regular buying option contract, and to exit that position, you must sell to close. For CSPs and covered calls, you sell to open that position, and you must buy to close it back, right? So the acronyms here are BTO, STC. That's for buying options. For selling options, the acronyms are STO, BTC. So it can be confusing. I'm going to say it one more time. Buying options, BTO is buy to open. To close that position, you must sell to close, STC. When you're selling options to open a position, you must sell to open, which is STO. To exit that position, you must buy to close, which is BTC. Okay, so the way I approach a wheel strategy, let's assume for a second that I'm assigned shares, and now I'm selling covered calls. Well, I wouldn't immediately jump on it and say, well, let me sell covered calls, unless the market looks like it's going to drop. Then I would probably jump in and try to sell calls, and then if the market drops, I'm in a great position, right? Let me back up for a second. So when you sell covered calls, and again, being in the money, out of the money, in the money is above the 50p that you sold. Being out of the money is below the 50p that you sold, right? So when I sell covered calls, I want the market to pump, right? And I don't want to be in the direction of an uptrend, which is actually, I'll take that back. I kind of do, right? So what I want to see happen when I'm selling a covered call is I get into the position, I sell a call to open the position, then it drops. Let's say it drops 5%. Well, I'm going to sell that position. My goal is to sell it quickly. I want to be in and out of that position multiple times. And I want to get as much premium as quickly as possible, right? And you go for these pumps. So stock market pumps, or your ticker, it jumps up to 55, and you got assigned at a 50p. It jumps to 55. It did like a 15% change, or whatever the percentage is on that. It did that today. That's where I want to sell a cover call at the 55p. My goal here is to raise the value of those shares and take in a premium, right? I don't necessarily really just want to sell the 50p when I'm assigned, because all I'm doing is collecting premiums on both ends, right? I mean, I kept the CSP premium, and then if I sell 50p, I take in a premium for that. The ideal situation is it pumps to 55, you sell the 55p, you take in the premium, and your shares gain 500 bucks on top of the premium that you got paid for a cash secure put. Right? This is ideal strategy. Example, I'm in a CSP right now for Fastly, FSLY, and I got a 75p. I could have actually exited that position a few days ago, 2 or 3 days ago, maybe even on Monday. I can't remember which day it was, but I could have exited that for like 400 bucks. I got a $515 premium on that. I could have exited for 400 bucks, but I wanted to be assigned the shares, right? So this is the mistake that I made. I'm in the CSP at 75. I want to own the shares, but stock today dropped $4 and some change. So it's at like $70, $71 now. I could have got out of that, got into the 70p for more than what I would have gotten for that 75, right? So, kind of hindsight 2020 on CSPs, right? This is why I say you want to recycle positions as many times as you can. Every time the stock pumps or every time it dumps, you get into positions, right? And again, every time it pumps, every time it dumps, whichever direction you're in, you get out. I did that 3 times with PLTR in the past 3 weeks, and I made $2,000 doing that, and that was off CSPs, right? So, Fastly, what I want to happen though is, again, I'm fine with owning it at 75, even though the price is 70, because I know it'll go back up. So what I'm looking to do is, when Fastly finally pumps up to say 77, 78, I'm gonna sell the 80p. I'm sorry, 80C, 80 call. I'm gonna short that 80 call, taking whatever premium it is, and if the stock price drops back down to say 73, 74, 75, I'm gonna get out of that position, right? Because if it's starting to create new highs, or in the past 30 days or less, it's creating new highs from its lows, that's kind of a trend change, right? And when something does that, you want to take advantage of it, right? So in this scenario, I would say I want to sell the 80p. Let's say Fastly jumps up to 77, 78. I'll sell the 80p, probably take in 3, 4, maybe $500, depends on IB. Stock price drops to 73, 74, I get out. Goes back up to 77, 78 this time, maybe 79 if I'm lucky. Sell the 80p again, get more premium this time, and continue to do that. And let's say this time it drops to 76, I get out. And then next time around it jumps up to like 81, $82. Well, now I'm looking to sell the 85p, right? So you want to kind of also concentrate on open interest, right? Wherever the open interest exists is where you want to really make your mark as far as getting into that position. So I'm going to quickly share my screen and just show you guys and gals what Fastly looks like as far as open interest goes, and why I would choose these areas. Give me 1 second. All right. Yeah, $70.33. I could have got out of this, and it's paying $5.20. See that? All right. So let's say I own shares right now, right? I'm going to want to wait for this to pump back up to 75 at least, right? At least want to wait for it to pump to 75 or close to it. And then it's going to, hope that it drops a little bit and take the profit, get back out, and then hope that it jumps up to say 77, 78. Then I could get on this 80p, right? See all the OI here? It's pretty good, all the way up to 90. And then after 90, 95 is kind of trash, I think. But the 100's really nice. I mean, it just, I think 105 is my profit target here, right? I mean, I'd be ecstatic to take in a $3,000 to $3,500 premium on top of my shares, plus all the premiums that I've taken in as far as the options. Right. So, I think that's about. I kind of went through that pretty quick, but I hope everyone understood it. I'm gonna stop sharing so I can see the chat window. I don't like how the Zoom pulls out the chat window and everything whenever you share. But all right, so now what I'm going to do is look through the questions real quick that are in the chats, and then we can get to everybody's questions on the voice. So I'm going to start with YouTube, since that's typically the one that I pay the least amount of attention to. Don't ask why, and there's not really much there anyways. Let's see. Okay, actually, take that back. YouTube doesn't have any questions, but it looks like Zoom does. Okay, so let me just start with. So JDM28 asks, how do I plan out my trades for the next day? I don't day trade. My trades typically last 3 days to a week, 2 weeks, a month. Just depends. Um, the way I plan to get in and out of something, I look for support and resistance. I will, if I'm in like a covered call, for example, like I said, I want to wait for the market to pump and do its dump, right? And I'm going to get in or out on those two ends, right? I don't want to be in the middle doing it. I want to get it on the ends. It doesn't matter how quickly it comes. If I'm in a month contract, so let's say I sell a 75p on Fastly, the month contract right now is going to pay me 375. Shit, lost my train of thought. Oh, how I plan. So I'm going to want Fastly again to pump back up to 75. So let's say tomorrow I get assigned shares and it's at 71, 72. I'm going to want at least for it to pump back up to 75, right? Because if I can sell the 75, keep my entire premium from before, and then take in probably maybe another $400 to $500. I mean, I'm looking at $1,000 premium if it takes my shares at $75. So beautiful scenario. I look at all of my positions. I look at all of the tickers that I'm interested in every single night. Right? I look at them, I chart them, I study them. I look at their price action. I look for support resistance areas. All that good stuff. Right? This information is vital to know when to get in and out of positions. Right? There's other things that account for why you would get in and out of something. That's just a few of them, and I can't think of everything off the top of my head though. R. Jablinski asked if I posted the Fastly trade. No, I did not. I haven't been alerting, honestly, because I've got other duties here on the server, so I don't really have the time to alert. Plus, I don't sit in front of my computer during the market, so it's hard for me to get into positions on my phone and then try and alert folks because I've got 4 accounts that I basically mirror. So imagine having to do the same position in 4 accounts and then go alert it, right? Okay, so moving on, understand IV. What does OI tell you? So OI tells me how many people are in this position currently, right? So if the open interest is 3,000, that means there's 3,000 people at that particular strike, right? And that's going to make a difference on whether or not you should get into that strike. I mean, I wouldn't get into a strike with anything under 500 contracts of open interest. So that would be a minimum. 1,000 is up more ideal. Anything over that's great. All right, let's see. I do not recommend using margin for the wheel. I don't recommend using margin at all, unless you're a very seasoned trader. Don't use margin. I mean, they're going to hit you with interest rather, at the end of the month if you're in a position. So I've heard rumors you could be in a CSP and not be charged off of margin, but personally for me, I'm just not comfortable trading money that's not mine. If you're comfortable with it, then by all means. I just think it's a little bit risky. So JD's asking, so when I buy to open a call, you get a better premium if you buy it on a low point and then sell high. If you were STO a call, you would buy while the underlying stock is rising to get a more preferred price. Yes. So if I sell to open a call, I want the stock to pump, right? And when it's at the maybe end of the day and it's pumping, you're going to want to get into that position at its high, right? Because you want to sell the strike is far higher away and higher from your current break even as possible and taking the most premium on that contract as possible. And that's how you do it. Let's see. Okay, so can you give a quick explanation on MACD and VWAP? Yeah, so MACD is just 2 moving averages that cross over. right? And that crossover, there's going to be a, I can't remember the names of the actual moving averages, but one's a very linear and smooth curve, and the other one is more of a volatile curve. And I think the default colors on Thinkorswim for MACD are like a teal and tan, right? So the teal, which is going to be your, damn it, hold on. I'm going to find this. Give me 1 second. I'm going to tell you exactly what it's called. It's going to bug me if I don't. Okay, so it's like moving average of convergence and divergence. I swear there was an actual name for both of those. I don't remember where I found it though. If somebody knows, feel free to speak up. But basically, essentially what you're looking at on, I'm gonna share my screen as well. So basically what you're looking at on MACD, which is this one here, you got the teal and the tan, right? So you got this purple line right in the middle. And this defines bullish and bearish, right? So bearish is below, bullish is above. These two moving averages, the teal is the one that does the crossover, right? So the teal, when it does its cross, typically when it crosses over the tan, that's a bearish indicator. It's going to kind of go down. But as you can see, honestly, right here, let me just draw this. Well, let me get down there, but all right, this should be good enough. So as you can see here, this crossover point on the MACD was legit, right? This one here. But this one up here is not, right? So it's a false one. It falls, goes back up, falls, goes back up, right? This one right here is probably more concrete because it's crossing back over, and then if you, as you can see, you look here, it jumps up, right? I don't use MACD this way. The way I use MACD is when something has a very wide difference between the two averages, right? So let me remove these. That's not what I want to do. So this one here, this is an example of really wide averages. You know, you see how really wide they are. I mean, that's super wide, right? That to me says we're going to have a big reversal, right? But since we're in kind of a bearish market, in my opinion, or as far as the month goes, it did its crossover and then just kind of went slightly up and sideways, right? So that's how I use it. I would recommend folks kind of play with it and understand it before you start trying to use it the way I use it, right? So I mean, I've played with it a lot, and I think the way I use it is a little more accurate. The reason why I don't like indicators in general is because they're an after the fact indicator. So which means the stock price moves, then the indicator moves, right? You don't want to like trade off of that because you're already behind the curve, right? You don't want to be behind the curve. You want to be ahead of it. So that's why I use this as a, when it's wide, I can potentially find myself in a good position to get into a reversal. I'll use one more example of really wide, which is this right here. Look how wide, I mean, that's super wide. And then it rips, right? So good example there. Let's see, VWAP, I think was the other one, right? I'm trying to find out where that question was. Sorry, just bear with me.
Hostile, it was VWAP.
VWAP, okay. So the VWAP, there's a VWAP line that goes in the middle. Matter of fact, I'll just add it to my study set. Now, this one's a good one too, I'd say. There's no silver bullets, so don't think that you can just find something and it be a silver bullet, because that is not the case. You will never find that. Okay, so on the VWAP, you got this middle line. That's the VWAP line, right? This middle line right here. The yellow and whatever this color is, these are like your extreme ends, your outliers, right? So think of this as like a kind of like standard deviation channels, like I've got in the background, right? This purple line is going to be your fair market value, and then these other two lines are going to be like extreme ends of it, right? So a lot of people typically trade VWAP using it like, so let's say right here, you're going to jump into a bullish position, right? It touches this, and then it goes up here and touches the other end of the VWAP. That's probably when you're going to get out, right? And again, this middle VWAP line, this is specific to, and I've heard this across a lot of different traders and real good traders. They've all told me, and even traders from like banks, and I know a decent amount of traders, and this middle VWAP line indicates that rather, let me rephrase. Let's assume that we're talking about a hedge fund right now, or a bank, somebody with millions of dollars of shares. They can't dump millions of dollars of shares if they want to get out of a position, because they're going to affect that stock price, and that's not what they want. They don't want to dump, because number one, if they've got, let's say they got 100,000 shares and it costs $1 million worth, they're not going to be able to dump 100,000 shares in the market without, they're not going to get the full profit that they're looking for, right? So what they have to do is split it up and sell it in pieces and chunks, right? So that it doesn't affect the value of the stock. So let's say the stock's in a bullish trend up, and then they go to sell 100,000 shares. Well, that's going to rip that trend right from underneath, right? And then it's going to potentially just go neutral. That's not what they want. So what they really want is for that trend to be going up, and then just have some kind of small retracement pullback. And that VWAP line for these major players is going to be where they exit their positions, right? So let's say they've got to do it in chunks of 5,000 shares, where every time. So let's use Fastly for, let's use yesterday, since it looks like it touches that VWAP a lot more. Well, maybe not. Either way. So let's say right here, jumps up, they get out 5,000. Goes up here, comes down, they get out 5,000. Goes back up, comes down, they get out 5,000. Right? Up, down 5,000. Down, up 5,000. Up, down. You get it? You'll get the point here. Every time it touches that VWAP, these big people are getting out. Okay, so I think that was the only two, right?
Is it only applicable? And I see you're on the 1 minute chart. Can you use this on the different charts too?
I wouldn't recommend that, actually. Yeah, that's a good question. This is more of a day trading indicator. I wouldn't use it for anything beyond the 5-day, 15-minute. Once you start getting further out, it starts to really disappear, right? So here, I'll show you on 180. It's impossible to see, right?
Yeah.
Impossible. So I think maybe the 20 is about as far out. I mean, even then, like, you can't see it, right, on the 20. So let's go to the 10. Oops, let's go to the 10. Maybe you can see it on the 10. I guess you can, but again, I would recommend sticking to the 5-day, 15-minute at most, right?
Got it.
Okay, let me just see if I can get back to that. Okay, there it is. JD asked if I sell options lower cap stocks or mid high cap. It really doesn't matter. I'm not necessarily looking for a small mid or high cap or whatever. I'm just looking for good premiums, high IV, decent company that's not going to go out of business next week or in a month or 2 months, or somebody that's potentially bankrupt or whatever. I want to avoid those types of things, but I'm not necessarily caring what size cap the ticker has. I stay away from things that are typically under $15 to $20, like underneath those prices. I will probably avoid that. I like stuff above 20 bucks up to 150. That's about all I can afford. The best tickers out there are going to be like Netflix, Nvidia. I think maybe even AMD might be pretty decent. Tesla, Apple. Those are going to be the ones that once you got enough capital, that's what you're going to be wanting to trade. You're not going to be wanting to do these smaller ones because those like Apple not going out of business anytime soon. You could buy 1,000 shares of that and sell 10 covered calls on it and never ever um, not make money, right? You might get your shares called away if you're not careful, but I think Apple's actually relatively pretty easy to see as far as where it's going because it moves pretty slow. So I really like Apple a lot for that specifically. Okay, so let me just see if I can get through these questions on this chat window. We can get started with the folks with their hands raised. Let's see. Thoughts for tomorrow. I think maybe we'll see some green. So if anybody's in positions tomorrow and you have profit, I would recommend taking it. Let's see. Randy, how do I know what strike price is best for my call? I answered this, but I'll answer it again. Open interest is your most important thing when choosing strikes, right? And then premium and implied volatility. Well, I guess IV is important too, but if you have shares and you're looking to do a covered call, then IV really, it's relative at that point because you already own the shares and you're trying to make money off of them. So the only way you can do that is sell covered calls. Like I said, open interest is going to be the most important part, right? So I'm gonna go to this weekly so you guys can see the difference. All right, so the 75. All right, here's the 75, 1,300. All right, but everything else in between, so it's a $5 increment as far as open interest goes on where it's at. Right, so 76 is under 500, 77, 8, and 9 is all under 500, but then you get to 80, now we've got 1,300. All right, same scenario. It's pretty weak all the way through here, and you get to 85, and it's above 544. And like I said, at least 500 to 1,000. I would probably sell that position. I'm okay with that. And then again, you skip through a few more strikes, and get to 90. Look at that open interest. It's there. That's what you're looking for. And personally, when I do cover calls, I'm actually looking for this thing. So let's say, for example, it pumps to 75 like I want, right? I'm going to want to do weeklies, right? Because look at this premium, $263 for a week. That's pretty awesome. Theta decay is $17. So every day you hold that, that's $17 in your pocket, assuming the stock stays relatively flat, that is. So that's what I'm looking at as far as covered calls. I don't want to be in something for a month with covered calls because, man, imagine how many times the market pumps and dumps, especially that ticker in a month, right? Let's take a quick look. 30 days. Let me get rid of this VWAP. So, I mean, this is 30 days, right? This is probably not a good example because of the drop. Show 60. So we'll do this. We'll do this right here. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 6, 26 days right here. Right. So if I were to sell let's say it's right here at $107. Let's say I go to sell the 110 strike, then it drops, does like this. Well, I'm probably going to be in full profit by now at $89, $90. However, that's only in 4 days. Right. So let's say this thing dropped that low and I want to sell another cover call. Let's say I got out of it. And I'm like, all right, cool. I'm going to sell a 95, since it's at, say, let's say I sell it at like 90 when the stock price is 92, $3 difference in the stock price is probably going to be about 100, let's see, 150 to $250 in premium, right? So let's say I want to sell that position right here. Well, if I hold this for 30 days, it's going against me 100%. But if I got into it on this particular day right here, and I got out of it somewhere in between these 3 days, I'm going to see a 50% return there, guaranteed. The stock price drops so low. I mean, shit. What the hell? Son of a. The stock price drops so low, again, gonna be in 100% profit, or not 100%, like 80, 75, something like that, right? I mean, when the stock price dropped from 75 right now to 70, I'm still up about. Let's find out. 1 second. So the current situation in the market, 75, which is my position, and went down to 70. I'm still up $34 on that position. It expires tomorrow though, so all my theta has basically decayed. I'm still up $35 on this position when it went from 75 to 70, and it paid me $515 in premium. Right, I'm still up 35 bucks, and it's down this low. So I could technically take $35 profit tomorrow if I wanted to. Well, granted, 35 plus, what's the theta on this? 34. So I'd be at $65 in profit. I'm sorry, no, that's wrong. 16. So 35 plus 16, 40, 50. I'd be about $50 profit if it stays at $70.33 tomorrow. All right, let's see. I'm hoping that I'm answering you guys' questions, because I'm kind of just blowing through these as quickly as I can to try and answer everybody's question. Okay, how to avoid the PDT rule? You're gonna need to, well, it depends on the broker. Number one, if you're on Robinhood, you can't unless you got $25,000. Assuming you don't, because you're asking this question. And if you are on Robinhood, get off of it. Ping me or DM me, and I'll kind of walk you through why I think you should get off of it, and give you a couple of suggestions. But another way to avoid PDT rules, so let's say you're using Thinkorswim or Schwab or one of these major brokers, you got to make sure you've got a cash account, which means that you can only trade money that is settled. Right? So you got to make sure that you got a cash account, and that's it. You can trade as many times a day as you want. If you've got $100,000, you can trade. If all your trades are $1,000 a piece, you can trade 100,000 divided by 1,000. That's how many trades you got, and you can get in and out same day with all that money. So that's how you avoid the PDT rule. All right, let's see. So H, I don't even know what that kind of name is, but he or she asked, let's say I get to a selling put $1 a share. Well, number one, you're not going to find anything doing very, very few things do options at $1. But let's say you get a premium of $100. Now, if the market pulls back to your put price, okay, I get what you're asking. So basically, this CSP. So let's say you sell $1 CSP, you're going to need $100 to cover that position if it goes in the money. You're going to need to already have that in your account prior to getting into that position, or they're not going to let you do it. It's a requirement. Okay, so another question is, look to sell a CSP. So do I look to sell a CSP higher or lower than the current stock price, and then hope for the stock price to go back up? Yeah, generally that's how it works as far as the pricing of the stock. But when I look to sell a CSP, I'm looking for support, something underneath the current price, or if support's where the current price is at, that's where I'm interested in selling that CSP. How long does it take for your collateral to settle and reuse after you close the CSP? Typically 48 hours. Or like, let's say it's 3:50 p.m. today. It's not going to be ready tomorrow, but it'll be ready the following 9:30 a.m. the day after. So it's kind of like they say quote unquote 48 hours, but it just really means 2 full trading days, and it could mean you get out of that position at 3:55 p.m. that day, or you get out at 9:30 in the morning. It still needs to be 2 full trading days as far as the broker is concerned. All right, let's see. MACD and signal line. I think it is 1226. Yeah, 1226 at 9. Let's see. Next question. Have you always used your standard deviation lines? How do those compare to using EMA? I have always, I don't want to say I've always used standard deviation, but I've used them for a while. Um, let me take that back. I have not used them for a while. So I took a statistics class last year in the summer, and I learned about standard deviations, the bell curve, and outliers, and all that jazz. And then I realized when I was looking through Thinkorswim, I was looking at indicators, and I had tried to upload an indicator from someone else, and I saw standard deviation channels while I was doing that. And I'm like, oh, I know what standard deviation channels are. So then I, you know, added it to my chart and, kind of finagled with it a little bit. But I basically got the 3 deviations from the mean, right? So standard deviation, if you're looking on my chart, this gray line is the mean, fair price, average price, fair price, mean value. This is the top of the bell curve. In fact, let me see if I can draw a quick painting just for you guys to see what a bell curve is if you don't know what it looks like. And forgive my awful drawing, but be prepared. Okay. Whoops, that's ugly. Try again. So, consider this to be linear, right? So actually, that's not gonna work either. I gotta do it kind of like this. There you go. And then something similar to like that. All right, so I'm gonna draw these lines for y'all. Make this even better. So it's this color. Tan, I think, is my other one. Yeah, this is tan. Just kind of scribbling the color here for y'all. Move. Green and purple. So take a quick screenshot from your brain of this picture. This is a bell curve. This middle line, or the line in the middle of the curve, is your mean, and then these other 3 lines are your deviations. All right, so I'm gonna go back to the Thinkorswim here. So this deviation channel, these are 3 on top, 3 on bottom. And what these mean, basically when the stock price goes above or below this tan line, it's got a 33% chance of falling. When they go over the green line, it's got less than a 4% chance of going past it. Let's say when it touches this purple line, it's got less than 1% chance of going past it. Right? So if it jumps up to tan, it's got 33% chance of going higher. And then boom, it jumps up to green, it's got less than 4%. Boom, then it jumps up to purple, less than 1%. So at that point, it's got a 99.2% chance specifically from going from the 3rd standard deviation channel back to the mean. 99% chance it falls, and vice versa from the bottom. 99% chance it jumps. So hopefully that helps answer your question as far as standard deviation. I think there was another one in there for that. Let me see if I can. Okay, yeah. So EMAs are just that, right? They are averages, estimated averages, whereas standard deviations are mathematical calculations based off of the days or time frame that you've chosen, and it averages everything out, puts that mean value in there. That's your average value, and then it attaches your deviation channels afterwards. Automatically does it, just like EMAs. They automatically follow the stock. But I think they're very different. So I wouldn't classify them as being anywhere near the same. I wouldn't even compare them as being the same. Like somebody using an EMA, they're going to trade differently than someone using a standard deviation.
Hostile.
Yeah.
So essentially, this stocks follow a normal distribution, which eventually will divert back to the mean at some point. So
Correct.
the further away it goes away from the mean, either 1 standard deviation, 2 or 3, that's probably a time for you to get in or get out and wait for a pullback back to the mean. So you kind of know the direction depending how far it is from the mean, because everything follows a normal distribution.
Yeah, generally speaking, yes, that is correct.
Yes, in theory.
Yeah, in theory, that is right.
Yeah.
It doesn't always work out that
Got
way,
it.
but,
But it gives
like I
you a
said,
higher probability of
Yeah.
success if you do follow this rule.
I would say high probability. I would say higher than what you're at.
Higher. Yeah, higher. Got it.
And like I was saying before, there's no silver bullet, unfortunately. I wish there
You're
was.
right. So this is just a tool that you use along with your other analysis, such as the technicals, the fundamental sentiment, to apply it to determine the direction.
That's right.
Got it. Thank you.
You're welcome. Okay. Joey asked if true momentum is lagging. Yes, true momentum is RSI, except it spells out the trend. Right? It says green, red, green, red. It has overbought, oversold, and then a fair value. Right? I think RSI does have a fair value, which is 50, and then RSI has the 30 and the 70 on the top and bottom, or bottom and top, whatever. Same thing here. The true momentum is exactly the same, but it is a lagging indicator. Christopher, MCSA Christopher, so if it's wide, I should buy, and I assume you're talking about MACD. I'm not saying that you should. I'm saying that you should use that in conjunction with the rest of the stuff that you use to do your analysis. And if it lines up with everything else, then you can say this gap in that MACD looks legit. Okay, so what aggregation do I use on the momentum oscillator? I'm not even sure. What can you ask that question, Jagger? Not sure what you mean, to be honest with you.
So like the aggregation level on your momentum oscillator, like what time frame do you use?
Oh, I use all time frames. 1 year, 180 days. I never really go under a 30. I mean, I'll look at 20, 10, 5 and all that just to see, like, when I want to get into a position and like the 180 checks out, the 1 year checks out, everything lines up, then I'll go to like, the 5-day, 15-minute and say, all right, is the stock at a high or a low or kind of an average for the day? That's the only time I really use the low 5-day, 15-minute stuff so that I can determine if now's a good time to get into position or wait a little bit and see if the market changes and presents a better position or a better priced position, if that makes sense. And I see 2 folks with hands up. I will get to you shortly. Just so I can get through the rest of these questions. Let's see. So Johnny team, I would close out a covered call position. Never let it expire because chances are if the market's going up, if that ticker is going up, it's going to expire in the money. it's going to take you shares. So unless you want that to happen, you don't let it expire. I always say if you're in a 30 days till expiration contract of a CSP or covered call rather, you're going to want to try to get in and out of that position as quickly as possible for 25 to 50% profit. Okay, let's see. Johnny, I have no idea why the market dumped. Just the market does what it does, right? I don't have an answer for that, unfortunately. Justin, I have no music playing, so it's probably just you. So Ashley, standard deviations over Bollinger Bands. Bollinger Bands are not the same as standard deviations. They're more, I think they have, before I say something, let me add it to my chart so that I can make sure that I remember, because it's been a while since I looked at that. So this is actually much more similar to the VWAP, right? Has the middle line, has the two top of the bottom and top lines. And this one actually works a lot better for longer time frames because you can see it better. Right? So the VWAP, it stays tight. That's why I said you can only really go down into the 5-day, 15-minute and lower. Bollinger Band kind of acts as a VWAP, has very similar attributes, and you can use them in longer time frames. Not anywhere near the same as the standard deviations. Inflation, what are my thoughts on inflation stats? I think inflation stats are rigged and manipulated, and it's not the truth. As far as the trend, a bull trend for 10 years, yeah, I mean, the market's going to stay bullish in the long-term trend, right? I guarantee you, 99% sure, market's going to stay in an upward trend. Yeah, it's going to have short-term retracements. It's going to have, 3 or 6 month lows. Yeah, of course, maybe even year lows. But it's probably never going to break that massive low, right? So let's go to the SPY real quick and get rid of this Bollinger Bands. So this or 2020 Black Swan is what 2020 was. Is about the only time you'll ever see something test a big low like it did here on SPY. Right? You're generally not ever going to see the long-term trend go down, but you will probably see it every once in a while retest a low. I don't think we're ever going to test these lows again. I think this is going to pump back up, and it's probably going to retest this one here. Right? That's my guess. See, there's more to that. Let's see, so I took a look at SPY day intervals, and I think if bulls can't reclaim the 393 level, we'll be trading at 384 to 330, 384 to 3. I don't know what that is. 384. He has 384-38. Let's see. Let's take a look.
Sorry, I'm at 384 dash 388.
I got it. Okay. So this is 384 if I can get it. It's close enough. He said 388. Maybe. I don't see any real support in that area. One other thing we can check out is my good friend Fibonacci. 50% retracements at 385. So I'd say that's a likely scenario if it gains strength here at the 50% or the 61. 61's at 382. So either of these two I don't think it's going to go much lower than that. Okay. I have no idea as far as dips. I really don't know. I mean, I think we're still in a bearish short-term trend. I think that we'll probably start seeing the market go neutral soon, and then start an uptrend sometime mid-April, late April, May, maybe something like that. Although last year April was pretty booming. I think COVID was the first or second week of March as far as the drop. End of March, start of April, it started bouncing. So, generally speaking, the markets all perform and act in a very similar fashion. So we may not see the market rebound like it did in April of last year. We might see it rebound middle to late April, right? But it's going to be somewhere in there. Same thing that I said this year. I've been saying this a lot, that September, October, November, I'm sorry, take it back. September, October are bearish months. November, December, January are very bullish. February is a bullish slash neutral. And then sometime in February through March is bearish. And then after the bearishness, it transitions back to neutral. And then I think April of last year was bullish. Then we had a little bit of bearishness in May, a couple of weeks, and then it just went to the moon for the next 2 months, 2 to 3 months. I'd say I think it was like, well, instead of guessing, I've got SPY right here. Let's see. Yeah, so we had some kind of neutrality here in April. So again, like I just said it, we're going to probably see it go neutral, right? And I'm sorry, that's May. No, that's April. I'm right. So yeah, in April, we saw neutral, right? And it was actually bearish from the 20th of March, roughly, a little bit after. But like I said, the fall happened February, late February, early March. And guess what? Did basically the same thing this year, right? A little bit sooner. So I'm thinking we're going to see the same type of movements of the market this year. It's just going to be relative in those months. So like I said, we should see neutrality in April and some bullishness in May. And then June, July, sometime in August, we're going to see a top. And then it's going to take over, or the bears are going to take over. Happens all the time. Okay.
Can I ask a quick question?
Give me a second. I've got less than five here, and then we can move on to all voice questions. I just want to get through all the chat stuff because I generally don't pay attention to it, so I want to try to do that. Let's see. If I bought a CSP at $2, it is about to hit the strike. H exclamation mark. Not sure what you're asking there. See if you can rephrase that. Christopher, what do you mean as far as wide lines on the GM stock and time frame? We need some kind of time frame. If you're about to start the wheel strategy on any stock, how far expiration do I start my CSP and how far for your CC eventually? So G, I will do my best to get in a CSP at support, and I'll usually give it a month contract unless it's like an ETF or something like that. As far as covered calls, I do shorter time frames because if I'm trying to take advantage of the price going up, I don't want to sell a far days till expiration because I'm going to find myself getting my shares called away, guaranteed. Yeah, hopefully that answers your question. So as far as trading view, Pratik, I would ask Mario94. I think he uses trading view. That might be a better resource as far as that goes. I will tell you though that standard deviation channels don't exist there. Only on Thinkorswim, as far as I know. What potentially happens starting the wheel strategy using leaps? You talking about selling CSPs as a leap? Gee, you might want to re-ask that question. Macarius, what is quad witching? Quad witching is when every quarter we have massive amounts of contracts expiring all on the same day. That's quad witching. That is supposed to happen tomorrow, and the only effect on the market that it has is it increases volatility. That's it. You can't really say the market's going to go up or down. All you can say is that volatility is going to definitely go up because all these contracts are getting exercised, assigned, exited, et cetera, et cetera. Can I get out of a CSP to avoid buying shares? Sure, you can. Let's see, Chris, you're talking about MACD data. Go to wide lines. Oh, okay. What time frame, Chris? Hmm. 24-hour. So this. So I don't like short time frames, unfortunately. This isn't going to show me a whole lot of anything. The 30 is probably the best, but I'll be honest with you. Gotcha. Yeah, that's what I was kind of going into right now. Anyways, typically I like longer time frames for the simple fact that there's more concrete evidence there. There's more statistical evidence. There's more data to analyze. There's just a lot more for you, right? So at the 180, not really going to see too many wide gaps. But if you do see one, that's probably a good indicator, right? Like right here. Right here. Oh, shit. Was it? Yep. So if y'all can see this, well, actually I'll zoom in too. Right here, this Bollinger Band is pretty wide. Look at the rest of them. Maybe this one right here is really wide. But definitely this one's pretty wide compared to everything else except for this one, maybe two here. But the wideness here, it illustrates that being wide like that, it's gonna have some kind of reversal. It may not be a big one, but it's gonna do something. All right, moving on. Hopefully that answers your question and helps you understand what you're trying to see. Sushi, I've been discussing the type of strategy that I use, CSPs and covered calls. No, so if you sell a CSP, so you don't buy CSPs, you sell them. You get shares if it goes against you and expires in the money. All right, looks like I'm caught up on all the questions. I'm not sure who had their hand raised first, so I'll just let Alex go since he was just briefly recently asking.
Hey man, thank you. So, it's just a quick question. So, what I wanted to ask was, I've lately the strategy I've been using is like playing buying a big amount of contracts, but I have trouble getting filled for like buying at a certain price or selling at a certain price. Like when it's in profit, let's just say like each contract is like, and I have like 70, 80 contracts, like a big number of contracts. Um, and the price they're like up by like 20 on a contract or something. I'm trying to get filled at that, but it always kind of gets manipulated or lowers down when you try to sell, then goes back up. Like do you have any suggestion on like how to get filled better?
Set limit orders, number one. Look at open interest. If you've got
Mm-hmm.
70, 80 contracts and there's only 500, That's going to be hard to get out of. You've got literally almost 20% of the total open interest. Right? You want to be under the radar as far as volume and open interest. And what I mean by that is if there's 1,000 contracts out there, I'd probably only go up to 20 max, 30. Wouldn't go any higher than that. But if there's 5,000 or 10,000, then yeah, going to 100 contracts is no problem. Right? You want to be a grain of sand on the beach.
Okay. And how do you view like the amount of contracts like?
Oops, Alex, I just accidentally muted you. Unmute yourself and ask that question again.
Oh, it's okay. So like how do you view that? Like you know, the amount of contracts that are you know, out there.
So you go to your option chain,
Mm-hmm.
and then you can see I got the open interest column right here. And it shows all the contracts that are currently in that that are in the open for these strikes. Right. So the 60 strike for GM, for example, is 40,000.
Let me see. I'm gonna pull it up on my end. So you said GM option chain, and then you're looking at what, 60?
60 strike on tomorrow's expiration is showing 40,000 of open interest. It means 40,000 contracts are open for that position.
Oh, okay. Oh, I see. Okay. Oh, all right. Thanks, man. That answers my question. I really appreciate it, bro.
Yeah, no problem. Okay, Juice Man, you're up.
Yes. So basically, I blew my whole port on run a couple weeks back, and like I take full responsibility. I was just being too cocky since I had just made over like 300% on planner. Since then, my port is like it was at like 2,400, and now I'm at like 200. And I'm studying and reading the PDF from the Discord, you know, to like get better. But like, is there anything else I can add to my routine to like get back on track? I'm like also thinking about, you know, funding my account with that $1,400 stimulus check that I get to, you know, help my account get back sooner to where it used to be at. So I'm just not sure what I should be like doing besides that.
Well, it sounds like you need to learn how to do some technical analysis and charting, right? Because if you're losing money like that, your analysis needs some work.
Yeah.
I think you should definitely start there. So if you go to my channels, yeah, I got 2 channels, either one on Discord. Go to, so I got a playlist on my YouTube channel. It's called Stocks.
Yeah, I follow your YouTube channel. Actually, you're the one who's supposed to message me to so I can find the official only options trade YouTube channel because I don't have like access to it, or I would be watching those YouTubes like religiously.
Yeah, no, I'm that person. So I would say definitely watch all of the non-lecture videos on my channel because those are specific. And then move on and start going through the lectures. I mean, there's a ton of lectures, so you're going to be stuck for weeks on end listening to all the lectures if you have that much determination.
I do.
Okay, well, great. Then, you know, start with my small, short 5 to 10, 15-minute videos, and then move on to the lectures. One thing that I would say is, again, get your charting down, get your technical analysis down, and then start trying to find certain types of strategies that are going to benefit your lifestyle, right? So if you work a full-time job, for example, you can't day trade. It's impossible. Right? So you got to find the trading strategy and style that works for you in your situation, your scenario, right? Makes sense?
Yes. Thank you.
Okay, you're welcome. And
So
again, you know,
on your I'm sorry, I didn't mean to interrupt. What were you gonna say?
I was just gonna say again, you know, once you get through all of those videos and you know you come back to these live Q&As and lectures that we all hold, you know, that's how you learn, right? You're gonna go through videos, you're gonna see things, you're gonna take some notes and be like, what is this? Or I don't understand this. That's when you come to these things and you say, hey, I was watching a video, I saw this, I don't understand. Can you help explain it? That's how you get better. That's what we want you to do. Right?
So you're under the education one, right, Professor Hostel? All those videos, those are the same ones from YouTube, so I could just watch the same ones from YouTube, or should I go through the channel on Discord first and then go to the YouTube?
Either works. They're all on YouTube. I mean, the links could take you to YouTube. So
Mm.
if you go to the playlist itself, there's 12 videos in there specific, or that are specific to certain things, and then everything else is lectures and Q&As.
Okay. Thank you.
You're welcome. Okay, Ayan, you're next.
Hey, Hostile, how are you?
Good.
Hey, man, I just have a quick, simple question, though.
Okay.
And first of all, thank you and Fez. I've been doing good with my CCs and CSPs.
Welcome.
Like, I've been, like, working a lot lately. So, like, what channel you use to, like, for news? Like for the quick news, like, let's just say I got 15-20 minutes break, and I just want to look at the news, something like, which can give me the like, the most important news. I can just look at it. What do you use?
I don't use news.
You don't?
No, I don't
How
use
you?
news.
Okay.
News can be very misleading. It can point you in one direction and then be like, psych, I'm going the other way. They could report something that's phenomenal and then the shit tanks for no reason. So I don't mess with news at all.
Same thing happened today, right? Like, it just tanked for no reason. Like, I don't understand why it just started tanking.
Well, I'll be honest. It definitely has a reason. We just don't know it.
We just don't know it.
I promise you.
Like, I don't know if you remember now, earlier we were talking in the selling premium, and I told you, like, my TQQ paid me like 400 today.
Yep.
But I feel like, I could have waited more if I know more about the news. Same thing happened with my Neo. I closed it too early. It was like when I closed it, I think that one was around like 180, 190. And I closed it for, I think it was $94 something. I closed it, but it went to $19, $19.5. So I could have made like another 70, 80 bucks on it, at least 70 more.
Well,
but I didn't know the news,
I would call that collateral damage, right? Because you're going to get into a position, you're going to take your exits, etc., and then the market's going to do something like that, where you're like, well, shit, I could have held. But what if it didn't? What if it went the other way? You have no way of knowing. There's no way to determine that, right? So my suggestion is set limits and rules for yourself. Doesn't matter what the market does. Set the rules for yourself so that when it hits your mark, you do what you got to do. Don't let the market dictate what you should do. You dictate, and then the market just does what it does, and you hope that whatever you do is going to fall in line with the market.
Okay, so that's what you do, right?
Yes.
Okay. I just thought, like, after like 30 minutes, I saw the market again, and it just keep going down and down, and I was just like, I could have made more money if I know what's going on with the market. If I'm being like,
Well, my philosophy is get in and out as fast as you can.
Mm-hmm.
You don't want to hold something for so long, right? You actually want to get in and out of that position as many times as you can, right? So, like, let's say I got a $500 premium. Well, let's say you got a $500 premium for one of those positions that you got out of today, and you took 250 profit, right? And then it pumps, boom. You get back into another covered call, and then it tanks. All this, and then boom, you get out with another 50%. If it does that 2 or 3 times in 1 week, you're going to make more money than that initial whole entire premium for the month, right?
That's true.
So that's what I recommend people do. Don't stay in positions too long.
Yeah, but you have to have, like, that much cash available in your account. I'm trying to manage 3 to 5K just for, like, to get in and out from the premiums. But sometimes it's just hard to get in and out.
Well, 3 to 5K, it's hard to do anything, to be honest with you.
Yeah.
No, especially with
I just
CSP.
keep it aside. I don't use that 3 to 5K. I just use it to, like, bite out my my cover calls most of the time, or my CSPs, so I can just like get out of those whenever I need to.
I got you. Yeah, I mean, um, you're just gonna have to make sure that you set rules for yourself. I think it's the most important piece here is set rules for yourself. Good, realistic, and good, realistic rules that aren't like you're trying to squeeze something dry. Right? Never ever try to squeeze positions dry because it's going to squeeze you instead. Right? So I firmly believe the market will always come back and hit you upside the head when you're least expecting it. So set your rules, set your boundaries, stick to them, and I guarantee you will profit more than you ever have you could have imagined.
Okay, so my other question is, what strategy you use, or like how you see the chart to know, oh, okay, this is the limit for this ticker to go up. Like, for example, TQQQ, right? The ETF. I sold that when it was on 92, but it went to almost 95. So how am I supposed to know, like, there is any way, like any kind of chart I can learn that way I can know how much more is gonna go up?
Unfortunately not.
Really, right?
The best thing I can tell you is support and resistance. I mean, you can look at a chart and say, it's probably going to hit resistance here. It's probably going to slow down from its upward trend here. It may not stop, but it's definitely going to slow down. That's like a covered call entry, right? So there's really nothing out there to say, hey, the market, it's going to keep going to this price level. Hell, I wish there was. We'd all be rich.
No. I get that part. Like, yeah, like I said, like, a resistance level. Like, I don't know how to read that.
My videos.
Your
Go watch
video.
my videos. Yes. Support and resistance are the first 2 videos I've ever made. So they are there. I think they're
It's on your
valuable.
that YouTube, Professor HT, right?
Yeah, that channel. Yep, you can find it in there. Watch those videos. There's a lot of videos in there that pertain to chart analysis because that's the type of trading that I do. I don't necessarily use technical indicators. They're kind of like, let's say I get a checklist of 10 to 15 things. All of my technical indicators are the last things that I look at. And
like
they don't
the one
necessarily.
only I use.
What's that?
No, the one I only use is VWAP. That's the only one I know, or I'm good
you.
at.
I mean, honestly, simpler the better, right? If you don't have all these indicators and you're just doing chart analysis alone, you can make money doing that.
Yeah, it's been good. I'm not gonna complain. Like, it's been going good. I've been more like, consistent money than before. I was losing a lot in option swings. But once I like with this new account, I started just the premiums. It's been like consistent good money. Like so far for this month, I'm like more than 2,000 up. So which is pretty good for me.
Right.
Yeah.
Yeah, I mean, if something's working for you, keep doing it, right? I mean, if VWAP's working for you,
I think I'm gonna keep doing
it.
this premium. Yeah, I'm loving the premium. Like, I don't have to worry about it. I don't have to keep looking at it.
Right.
I just have to like, even if I get too busy in work, I can just not look at the whole thing for 2 days.
Right. Exactly.
Like, I don't have to worry about what's going on with the market. But yeah, sometimes when I close too early, I feel like I should have known better. Like, I should have known what's going on with the market, or just know what's the news. I have to look at it just so like, I can close at a better entry, or better, like, better exit.
Well, there's always going to be better something of everything, right? I mean, you're always going to have opportunity to get better value for your dollars. But
that's how you get greedy, right?
Exactly. It's exactly what happens. So the more you try to get, the more the market is going to get. Just remember, the market is going to beat you every time. The only way you beat the market is to get out of the market before it beats you. That's it.
Yeah, just need to learn that.
Yeah. Good luck.
Not even enough experience yet.
Yeah, it's gonna definitely take a lot of that. I promise.
All right, thanks, man.
Yeah, you're welcome. Okay, Sushi, you were next.
Hi, Hostel. Thank you for taking my question. So, recently I've been trying out a new strategy, and I just want to hear your input on it because I feel like half the time it's working and half the time it's in the middle. So basically, I basically do day trade options where I basically look at the resistance line from the day before, and if the stock price for just today goes above that resistance line, and if the MACD also crosses over and puts out a buy signal, that's when I'm going to enter. And my exit point is basically when the stock price fails to cross the next resistance line, and when MACD signals basically signals a big sell off.
Okay.
So I'm kind of new at like just trading in general. So like, what's your input in like the strategy?
Well, I'll say that day trading is probably one of the hardest things to do in stocks. The easiest thing is shares. Hardest thing is day trading, and specifically buying options. I think that is the most complicated thing to do because you've got to know such a short period of time when to get in and out of something, right? You got to know a
Right.
lot of things in this short period of time. Whereas this longer period of swings, you've got a lot more options or choices to get in and out of positions with profit. You got time, like if I buy options, I'll buy leaps, right? I will buy leaps. I got no problem with buying leaps. And the beauty is like, so Clorox, I use that as an example because I just did that one not too long ago. I bought 3 contracts, sold 2 of them for $400, and then the last one I was going to let it ride. It went down. I was down to $700 of loss on this leap, right? And then this week, I think it was Wednesday, I was able to get out of that for $180. And I had to hold that for another 2 or 3 weeks, I think. Right? But if you did that with, well, number one, you can't do that in day trading. You can't do that with monthly options. You can't do that with bi-monthly options. You're going to need to do it with 6 months to a year out because theta decay on a leap is $1 a day. Whereas theta decay on a month contract, shit. Let's see. Let's go to Clorox. So I'm going to show you how much the theta decay is. So it's gone up a little bit as time has gone by. So it's at $2 now. All right, for Clorox on little less than a year out, 9 months roughly.
Yep.
But then you go to the April 16th, which is 29 days out. Now we're looking at $8 of theta, right? So the difference here is this contract costs $500 and you're getting $8 of theta, whereas the leap it costs $1,800 with $2 of theta. So let's do some quick math, right? So 1860 divided by 0.02. Sorry, I need to do just 2. 2. No, that's not right. Give me a second. That's what I meant to do. No. Oh, I'm doing it the wrong way. $2 divided by 1860. That is 1% of 1% off of that total value. So $1,860, $2 of theta is 1% of 1%. Actually, no, I think it's 10% of 1%. So that decimal number, right? So we're looking at, again, 2 divided by 1860, decimal number right here, right? So that's actually, I think that's 10% of 1%. And 1% would be actually here, 1% of 1 would be there. So this is basically 10% of 1%, right? Follow
Yep.
so far?
Yep.
Now look at the theta difference on 30 days out. $8 divided by 500. Now we're looking at 1.6% of theta loss, which is basically
1% of your entire
16 times more of theta loss in April compared to that leap. That's a lot. That's a ton. So here,
Yep, that's what you're saying here. Yep.
I'm gonna let you see another thing here. Go back to this leap. So if I have to hold this position for 60 days, right? So initially it was only $1, mind you, when it was, I did it in, I don't even remember, but it was $1. It was $1 of theta when I did it, and I paid 16.20, I think. I don't remember. Forgive me for not remembering the numbers, but if I lose, let's go off what we got here, $2 a day. I had to hold that for 60 days. It's $120. Right? $120 of theta decay. I paid $18.60 for that contract. That's what it's worth. If it just stays where it's at and it just decays. All right.
Right.
And that's 2 months. 2 months. Only cost me $120. That position is going to show me profit much sooner than 2 months. Right. So
Yep.
leaps are always going to give you a better exit, more exit chances. Right. Because the theta doesn't decay hardly at all. It does, but very little. You know, I like to do 12 months because I'm definitely getting the least amount of theta decay possible. And if that thing takes 2 months to move in my direction, I'm still going to make money. Whereas if you get into a position that's 30 or 60 days out of expiration, if you've got to wait a month, you're screwed, right? You're screwed. Well, all right, let's take a look at this May. May would be basically 60 days, right? 64. So it's $6 theta decay. And I wouldn't say you're screwed, but it's going to be hard to come back and make money. You can probably get out with maybe, a little bit of money, right? So let's say this is $800. If I got to hold this position for 60 days, I know I'm not going to say 60 because it's got 60. So I'm going to say 30. Half the time, so 32 days. And mind you, theta is going to increase as time goes on, but I'm not going to be able to account for that because I don't know what it's going to increase to. All right, so I'm just going to say 32 days times 6. All right, $192 off of 800. Right, that's 20%. I'm sorry, 25%, roughly. 25% loss that you have to come back from because of theta. Right.
Yep.
My Clorox position never went past 30%. It did go low, right? But not because of theta, because of the stock itself. But it came right back up 3 or 4 times and went to 120, 150, 190, whatever. I got out at 180 on my last contract, so technically I made $900, almost $1,000 off 3 contracts with Clorox in the past couple of months, I guess. I'm not even sure. I think it's been a month or 2, roughly. So you see the difference here is the change in percentage of loss based off of theta and the contract price is much more exponential with less time, right?
Yep.
Cool. Is that it? Any other questions before I
Yeah.
move on
So
to?
just
Okay.
another quick
Sure.
one. So like again, going back to the data, I'm not really theta thing, but just going back to data in general. So I know like you could buy like options that's at a very later date at a higher price. The issue is that I'm actually working with a small portfolio because I went from, so let's say I made a large chunk of money because I got lucky and because of greed and other things. I went from pretty a substantial amount of money to only dropping down to around 500. So I'm trying to work my way up towards that amount. And
Well, the
I
things that didn't work, don't do them.
right. So I've learned from my mistakes. I don't do the things I used to do before.
Yeah,
AKA
as long as you don't repeat mistakes, you're going to move forward. You're going to become successful. Even if there's more failure, just don't make the same mistakes over and over. Learn from them, and you're going to become a better trader because of it, right?
right,
And
right.
I
So
think that the strategy that you're employing with the amount of capital that you have is just very risky. Right? You're getting into positions that are the most risky out of all of them. And instead, you should be going on the opposite end of the spectrum as far as risk goes, right? You shouldn't be trying to make quick, fast cash off of small amounts of cash. It just doesn't happen, right? I mean, it might, it could, every once in a while it will, but the probabilities of you continuing to do that are slim, as you found out, unfortunately, right? So
yep.
I think you need to reevaluate the type of strategy that you're utilizing and look for something a little less risky that's going to pay something consistent, right? And if you've got 500 bucks, um, so my goals, I'll tell you my goals, 100% return on my account every year. If you've got 500 bucks and you make 500 bucks, you just made 100%. If you made another 500, you just beat me, right?
Yep.
So look at percentage, not dollar amount. And I think you should consider different trading strategies. I think you should consider shares with 500 bucks. You should be doing shares until you get about 5,000 to 10,000, and then you can start moving on to options. And as far as that goes, there is a skill level or a hardness level, right? So beginner, novice, shares. I think that option selling is easier than option buying. So that's why I consider option selling to be the next thing people should learn when doing options or when doing stocks, because you go from shares. If you're successful and you can make money doing shares, now you go into options. And instead of going straight to buying options and scalping days and daily scalping and weekly swinging and all that kind of stuff, you should go into the other side of it and learn what option selling is. At least learn it. You don't have to do it. Just understand it, learn it. Because if you learn that, that's going to make you a better buyer because now you know what the sellers are looking for, right? It's two sides to the coin. If you don't know both sides, you're handicapping yourself, right?
I see. Yep.
So I think that's where you should put your concentration. Do some shares, spend the time learning more, finding new strategies. Kind of push. Because I'll be honest, I was where you were at before. I wanted to day trade. I wanted to make thousands, and it just didn't work for me. And there's a lot of people that it doesn't work for. There's some that it does, but there's a lot more that it doesn't. And I realized that early on that day trading is dangerous. You lose money fast,
Yeah.
and you're I want consistency. I want something that I can rely on. I want something that's not going to make me stress out and constantly be looking at the screen. And shares. So I went back to the drawing board and I went to shares instead. So I was doing buying options. I was day trading. I was swinging, scalping. Trying to do that kind of stuff a long time ago, and I was getting crushed. So when I first did options, the first play that I did was Apple. I bought 4 contracts. It ripped. I made 7,500 bucks on top of the 1,000 that I put into it. Right. So I'm like, hell yeah, I'm good. I'm great. I'm the pimp. I'm a king. And then I started getting my butt raped. Right. I mean, I was going out there doing day trades,
That's
swinging, and I'm getting crushed.
that's exactly what happened to me.
Yeah. So I mean, like I said, I know exactly what position you're in because I was there. Right. So go back to the drawing board. Go back to shares. Go back to simplicity. And when you trade shares, you're going to learn things that you can't learn with options, like patience. can't learn that with options. Options is there's no patience. It's the opposite, whatever that means, or whatever word that describes the opposite of patience. Um, Shares, on the other hand, is going to teach you how to be patient because 9 times out of 10, it's going to take something a month to show worthy enough profit for you to take. Right? And that's where I started. When I started making money, when I started being successful, was when I learned how to trade shares and I learned how to chart. Those two most important things when learning how to trade. If you can't trade shares or if you can't make money trading shares, you shouldn't be doing options. Period. Honestly, I think the broker should be like, all right, there's a pathway that you have to go through to get to where you want to be. And you got to start with shares. And if you can prove to us that you can make money with shares, then we'll let you do options. But they don't do that. They just take a questionnaire, and if you answer the questions right, here you go.
Yep. I see what you're saying. Thank you, Hostile. That
You're
was very
welcome.
helpful, man.
Yeah, of course. You're welcome. Maria, I saw your hand go down. You still have a question? She's still here? Did she leave? No telling. Oh, yeah, she left. Bummer. Oh, there's two more hands. Okay, TSB, go ahead.
Hey, can you hear me?
Yep.
So, I know you're not, I believe it's you, you're not the fan of long-term holding. But I do have a question on one share position that I've been in for a while, and I have it because of what Zorro posted in the trade floor earlier. I have one share position that I'm up decently on. I don't know the exact percentage. I've been holding it since August. Should I just sell out of that to be safe for how the market's looking right now in general?
Are you up on it?
Yeah, I'm up. I can go look how much.
Just give me a percent.
Yeah, I'm gonna look the percentage. I'm up 26% on it.
Is that, have you been up higher than that, or is that the highest you've been up?
It's currently been trending generally up. Today was a down day, so I lost. It went down 5% today, but I mean,
What's the ticker?
it's been MFA.
Oh, okay, MFA. Yeah, I know about MFA.
I've been thinking about selling it already to have extra cash for Mario's share challenge. But I just been holding off because it had been holding that little uptrend that it's been doing.
This thing actually used to have fairly decent option pricing at like $2. Used to give me like $50. It's awesome. But I wouldn't worry too much. I mean, you can take the profit, but I would have taken that earlier because she really tanked. Well, I wouldn't say tank. I mean, a
It
38
dropped
cent
heavily.
drop.
Yeah, it dropped heavily today.
Yeah, it's a pretty heavy drop, I'd say.
So
Yeah.
I have two portfolios, and the one that's in, I just generally don't look at because it shares that I just don't look at them. And I didn't think to look at it until not too long ago. So like, see,
I wouldn't worry. You're in shares. You know, do you have a profit target? Is there a number you're looking to get?
no, whenever I got this, I just started off, and my whole reasoning to get in from it was pre-pandemic. It was holding that 8 level. I mean, it was valued pretty decently, and it seemed to be decently strong company. So I was like, my rationale was I can put money in this, and then it will trend back up over time, and at some point I can just take whatever profit it gives.
I mean, like I said, it's shares, so you've got whatever time you want on it, right? And it's just been uptrending since COVID. So, you know, like I said, I used to trade this. I liked it a lot. So I used to get in. I think I got in this at 150 and sold it at like $3. Did that. I got in at like $2, sold it at 250. Got in at 250, sold it like 3 something. Then I stopped because I'm not doing shares anymore. But I wouldn't worry. Again, you got shares, you got time. I guarantee this thing goes up. It pays phenomenal dividends also.
Yeah.
So, you know, if you got to wait it out, I don't see any problem with it because of the dividends and because it's upward trending and because the market itself is ultimately trending up, right?
Okay.
So, hopefully that answers your question.
Yeah, that was my first thing was just he'd posted that and he was like, you want to close out of your positions. And most of my positions I get in and out of fast, and this is the only one that I've just not even looked at all, really. So I just wanted to ask about that.
Yeah, I
'Cause
mean,
Zoro, what Zoro posted in there made it sound very, very bearish.
it does, and it looks like it. But like I said, March isn't one of those months that I'm worried about the bottom falling out, right? I'm
Okay.
just not worried about it. I mean, I'm super heavy in CSPs, and they're all in the money, so I'm gonna be owning shares tomorrow. I'm gonna be owning about 1,000 shares of different stocks, so um, I wouldn't worry too much about it at all. You got time. By July, this thing's gonna be having highs, post-COVID highs that haven't been met yet. I guarantee that.
Just the market general.
Yeah, I mean, just give it time, it'll
Yeah.
pump. Yeah,
Okay.
absolutely. And there's really nothing stopping it from going up. I mean, it's slow. It's a slug, but I don't see anything stopping it. Right? I
That's
mean,
fair.
if you let's see, I'm not sharing my screen again. I'm sorry. Let me get back to it. So if you're looking at my screen right now,
Yeah.
it's just an uptrend, and then there's nothing. So there's nothing in between this candle, which is right here, and the current candle.
Yeah.
Nothing. So, matter of fact, let me go back. You got a gap that is above the current price. I think that's going to pay. Definitely going to
Okay.
hit that.
All right. I'll probably just leave those shares and then other position I might close out, but this one particularly I'll leave.
Okay. Yeah, I mean, like I said, I wouldn't worry too much about it, man. You got shares.
Okay.
I think he was probably
Cool.
more so referencing people with options.
Yeah, I asked him even shares, and he said especially shares. He said you risk bag holding then if the market goes south. And I was like, I don't.
Yeah,
Some of the
you definitely are going to risk bag holding, but I mean, that's the beauty of shares is you can choose to bag hold and still come out on top, right?
yeah.
So that's what I do.
Cool. Cool. Thank you.
You're welcome. Okay. I think there was one other person that had their hand up, but accidentally lowered their hand. I'm not sure who it was. But if you want to raise your hand again, I'll come back to you. Is that Michael or Mitchell or Mikkel? How do you say your name?
Michael, Michelle.
Okay, okay.
Yeah, it doesn't matter to me though.
Gotcha.
Yeah, so like so I just started like trading, like I mean I've always known about stocks and stuff, but like I started like really getting into it like January this month, and then I got lucky on SNDL, I made about like 2,000 on that, and then option I didn't even know like what option is. I just look at the chart. I was like, if a year ago by February it was up $1, this February might be up, and then I got lucky, it was up. I didn't even know how to close it. I don't know what happened. I made $2,000, right? So, but like, I want to trade options for some reason. Like, I want to trade options, but when I'm buying options, right? Like, it doesn't sit right with me, and Carl, Tilio, the other guys, like when they're posting like entry alert, like it looks good, like 60% up, 30% up, but like to me, it's just like it's too risky to me too. Like to know, it's just too risky to me. Like I don't want to get. The only thing I like is selling options. So from selling options, I've made like a lot of money for the past week. So what I would do is like I will sell a put, and then when I see like it's up in profit, I just like close it, get the profit, and then redo it again. I don't know if it's what I'm talking about though. And then what I wanted to know is right, when you selling options, right? What's the main things that you should learn about? Like chart, I mean resistance and support. What the main thing you should know about when selling options?
Well, those few things you mentioned. I will say that I've got a so my playlist on my YouTube channel is specific to things such as Greeks, support resistance, trend, retracements, Fibonacci. It's all chart analysis. Those are things that you need to really, I think, to be successful at options, you must know these things. Learning how to read an option chain is going to be probably the first thing you should do if you don't know how. But I assume you do, since you know how to, since you said you were doing CSPs.
Yeah,
I
I was
agree
doing.
with you in the sense that buying options is risky, and it doesn't sit well with me either. Every time I've tried it, I've gotten crushed, except for leaps. I can do leaps and I make money, but anytime I do something other than a leap, I'm getting hurt, and I don't like that. So I don't touch it. So I'm right there with you. That's why I sell. I mean, I make 2 to 4% a month. You know,
Man,
this month, or let's see, what's the date? Yeah, this month I'm just over 2,000 in profit,
dang, already.
and that's uh that's only halfway through, right?
Yeah,
I got
yeah.
multiple positions expiring tomorrow. They're all going to be in the money, but I'm going to keep all the premium, and I'm going to be selling covered calls and all of it at the strikes that I got assigned. So guaranteed, I'm coming out of this month in profit on
Yeah.
top, and it's most likely going to be anywhere from 3 to 4,000 in profit. And I've got a
Mhm.
$100,000 account, right? Or let me rephrase. I got 3 accounts that are $35,000, or two are 35, one's 30. So basically, that's my $100,000. I mirror all of those. So if I do one trade in one of them, I do them in all of them, right?
Oh, okay. I see what you're saying.
It's impossible to be like, you know what, which damn account did I have CLX in, or which account did I do CSPs in?
Oh yeah, I was thinking about the same
You
thing
know,
too. I
like,
was because I was trying to do because I think last time I talked to you and you told me to not use Robinhood, but I'm sorry about that. But it's easier for me to understand like the charts. As soon as you put the numbers, it tells you like the credit estimate credit. It's easier for me to understand because I use Weibo too, but Weibo is kind of like hard for me. So I think I'm about to do the same thing. Whatever trade I put on Robinhood, I'm gonna do it on Weibo too.
you could. So what you were talking about, how Robinhood shows you the premium, right?
Yeah, like it's kind of like it's easier for me to understand. Like
You should
everything.
look into using Thinkorswim then. If you don't like how Webull does it, I mean, here, look at my screen. Or wait, am I? I'm not sharing home. Let me reshare. I always pull it out of the share so I can see the people with their hands up, because it removes that. Kind of, it's weird. I don't know, but uh, so with, let me just go like Neo. So with let's say on Neo, I want to sell a CSP, right? I want to sell a 40p. It's gonna be this one. It tells me how much it is right there, 310. Right? If I click on it, there it is again, 310. If I click confirm and send, there it is again, 310. Right? That's, I mean, this is why I like Thinkorswim. I can right click, and I can do multiple strategies right off the gate. Right? I don't even have to really think as far as, like on Robinhood, if you want to do like some kind of spread, you've got to go to multiple screens. That's a pain in the ass. Now, CSPs and cover calls on Robinhood, it's probably not too hard. I'm just not a very, I'm actually 1,000% against Robinhood because of all the other negative things that it has. Like, it's got, for every one good thing, it's got 10 bad. So To answer your question, Michael, you're on mute. You're talking.
Oh, you said like the first thing I should learn like when selling options is to learn how to read options.
The option chain. So I didn't know
Options.
I didn't realize you were on Robinhood. You don't. There is no option chain on Robinhood. Look at
Oh,
my screen. Oh shit! I stopped sharing again. Fuck. Hold on.
sorry.
This right here is an option chain.
Oh, that's what we call the option chain, right?
This is an option chain.
Okay, okay.
So this right
So,
here, you definitely need to learn. That's why
so
I
you
said
should
get
learn.
off of Robinhood because they don't
Oh,
have it.
okay, okay. Because I should learn about the IV, the Greeks, and all that, right?
Yes.
All right, I got it. And then, what do you think the next step is after learning about this, the option chains?
Well, the thing with the option chain is it's going to spawn things that you didn't know about, right?
Mm-hmm.
It's going to spawn stuff that you need to go investigate. If that makes sense.
Yeah.
And it's going to be a requirement, in my opinion, because if it spawns something like a question or like, what is this? Or what does this do? Or, I have to pay attention to this because if I don't, then it's going to be bad for me, stuff like that, right?
All right, I got
It's
it.
definitely going to spawn stuff like that.
All right, and then what about shares? Because I'm doing options for only one reason. The main reason I'm doing options is to make enough money as fast as I can, and then to invest in long term, like because I don't have enough money right now to like buy shares and hold for long term. So I just feel like, if I know how to do option, if I'm good at it, I stay consistent and learn the charts, support resistance and all that, I might be able to make enough money to like invest in long term to have my long term portfolio. And like when I'm doing long term, I would like to do some like I would like to get to other stuff to like scalp, probably swing trade, like um I like to like study the chart. Like the main things I should learn about when I'm studying the chart is support and resistance, right?
Yeah, absolutely.
And then that's what I'm trying to know.
I got you. Well, I think the best place for you to start is going to be where I've pointed pretty much everybody so far is my playlist of stocks or stock videos on my YouTube channel. And you can find
No,
those on my Discord channels.
no problem. I'll do
I
that.
think there's 12 videos in the playlist, and it's
Mhm.
I mean, those are very key components, most of it, to trading
Oh,
and charting.
all right. And then one last question, if you don't mind. What's the max profit like percentage return you ever make in a month trading options? I mean selling options, not like buying and selling, just selling.
Um, Not sure, 3 to 4 grand. I mean, so the way I trade is as my account grows, so does my profits, or so do my profits. All right. So if I've got, and I always go by percentage, I said 2 to 4% a month. So what I'm after is, whether if I've got $100,000, that's $2,000 to $4,000 a month. If I've got $1 million, that's shit, 20 20%, 20. I'm sorry, 20,000 to 40,000.
Mm-hmm.
Yeah, that's 2% of a million, right?
Yeah.
Okay. So when you look at it in percentage, that's where the real gains are.
Yeah,
Right?
yeah, that's right. Yeah.
So, for me, kind of where I'm at right now is about the most I've made in a month, I guess. Right? Because my account is the largest it's ever been. So, of course, I'm going to make more money because I have more to spend.
Yeah, want to spend, yeah.
All right. So, percentage is really, I think, the question that you should be asking is what's the largest percent gain that
Yeah,
you've seen?
percent gain, yeah, that's what I meant though.
And in that scenario, I'd say 10 or 15% of my total account in a month.
Mm-hmm.
So I
All
mean,
right.
and that's phenomenal.
Yeah, it is. That makes a lot of sense. And because like sometimes I'm looking at the Microsoft, I'm like, damn, look at these premiums. When you times those like $15, $20 premium times like at least 500, you're looking at about like 7,000, weekly. Like
Shit,
I'm
go look at
yeah.
Tesla. Go look at Tesla. Holy fuck. Tesla's
like,
crazy.
like when I'm looking at stuff like that, I'm like, damn, if only I could find somebody like just give me 100K right now. I sell, CSPs, and make a lot of money, But I'm like, I gotta start slow first, I'll build up because right now I'm only like my account is like I've met about like I think 900 like this week selling options because I sell a put, I see the price go up, and then I see like his profit. I'll close it. I buy it back for more money and buy it back again. But sometimes when I'm looking at Tesla, Microsoft, I'm like, this is a lot of premium. Yeah, I need a lot of money for that.
Yeah, oh yeah. Tesla, you need 90,000 or 80. Well,
Yeah,
when it was 900 a share, you need 90 grand.
like yeah.
So
And for Microsoft, you need about like 300 something, right? 300.
yeah,
Two,
250, 300, yeah, something like that.
oh man. All right, thank you.
You're welcome.
All right.
Okay. Let's see. Go back to the chats to see if I missed any questions. So G, should you always have the extra buying power ready to close a CC or a CSP? You already have that buying power tied up in a CSP. That buying power is also tied up in your covered call because you own the shares, right? That's your buying power. So it's already um, like they put it on hold. The broker will put your cash on hold when you're doing CSPs so that if you do go in the money, then they just take your cash and give you the shares. And vice versa. You sell a call against those shares that you get assigned. That is your buying power, are those, which is those 100 shares. All right. So when that gets called away, then your buying power returns. Let's see. P4, what delta do I buy leaps at? I don't even look at deltas. Support and resistance is my delta. Some people use delta, delta, like as of today, delta gives you a percentage of in the money, out of the money. But tomorrow it can change instantly, and that delta is completely irrelevant. So I don't really, I mean, like I said, I have delta there on my chart, on my option chain, but it's not something that I go, oh, well, when I get into a position, does it have this kind of delta? No, I don't really. I go for open interest and as close to at the money as possible, right? And whatever I can afford, obviously. um, let's see. Oh, so critique how reliable are Head and Shoulders or Inverse? They're pretty reliable, I'll be honest with you. I mean, I think very large percentage of the time I've seen it, it's gone the way it should have. So Head and Shoulders or Inverse Head and Shoulder patterns are one of the top ones. The other ones that are pretty good that I like a lot are going to be double tops, triple tops. Those are a triple top is basically Head and Shoulders, but the head is shrunk, right? It's kind of equal to the shoulders now. So I think that chart pattern is extremely uh, reliable. Okay, let's see. Um, Okay, Peter, you have a where'd it go? 401k IRA question. Go for it.
How you doing?
Pretty good.
So I watched your IRA or Roth IRA video. Started looking into stuff and options that I have. So I currently have a 401k, and I've been contributing Roth and also after pre-tax to it. So it's kind of divided so that later on, wherever I'm going to be at. But I'm looking into rolling some money out of it and putting into a traditional IRA because I don't qualify for a Roth based on the earnings. So I'm limited to, I can only take out, I think it's like 20% of what I have in that account.
The 401k?
Yeah, because everything else is locked up to do contributions from my employer and what else. So what I'm also thinking about doing is stopping my 401 contributions and just taking that money after tax and just dropping into a traditional IRA. So is that a good idea, or should I just do a brokerage account? And I know if I do a brokerage, I'm going to get taxed on it every year. Whereas if I do an IRA, I could just defer, the taxes until 59 and a half.
So let
So I'm
me
just,
let me make sure I understand. You make too much to contribute to a Roth. Is that correct?
yes,
Okay. So, and that 401k you're talking about, are you still employed there?
yes. So
Okay.
but they will allow me to take some of it out, not all of it out.
Right, right. Yeah, my work does the same. I understand. So you're gonna want to roll that into a traditional IRA. Don't just take it out. You're gonna want to
Yeah,
roll it.
that's what I meant. I'm sorry, but I
Okay.
can't roll the full amount.
Right. Yeah, you can only do 20%. I understand that.
Hmm.
Yeah. So I mean, yeah, that's solid plan. I mean, I rolled mine. I was able to get 24%, so I just got a little bit more than you were able to get, but 20% is still awesome.
Hmm.
That's 20% you get to manage.
Yeah,
You
and
know.
then do you recommend so like the other thing is, should I stop my contributions? Because I get match 50% up to 8% of my contribution, which if I do a Roth 401 contributions is kind of nice because later on I don't have to pay taxes on that except the earnings.
So
So should I go ahead?
yes and no. So if you're doing a Roth 401k, I'd say
Hmm.
it's a little less crappy than a regular 401k.
Okay,
The problem I have with 401ks in general is you have no control. You're
I
just
agree.
stuck to whatever they decide. And I don't
Hmm.
like people dictating for me, so I would assume that you would be the same, right?
Yeah.
So I would personally, I mean, you're gonna have to weigh that out, right? I would probably contribute less. Um, well, I don't know. It really
'Cause-
depends on a lot of things, honestly, because so you're obviously making a decent amount of money because you can't contribute to a Roth.
mhm.
Um, do you work at a corporation? Do you own your own business? I assume you
I,
work at a corporation because they give
I
you.
work at a public utility.
Okay. So, and you say they give you 8% up to. I'm
They
sorry.
give me 50% up to 8%. So pretty much if I do 8, they give me 4 on top of that. So it's 12%.
Right, right, right. So my company, it's funny. Mine does the same thing. So, but they do it up to 3%, not 8 or 4%. So I was doing like I think I was spending 350, 360, and they were giving me like 190. I think that maybe not necessarily with a Roth, but with a regular 401k, that's just going to probably cover tax. So you're basically just doing the same thing you're doing in a Roth, right? You're throwing money at something or saving money. Let's just say saving money, and then over the long period of time, whatever money that your company gave you in a regular 401k, that's going to get taxed. Like your whole entire account's going to get taxed, but the
Mm.
money that your company gave you, that's basically going to pay for tax. So it's worthless in my opinion. Now with a Roth, taxes are already taken, which is a benefit here, right? And if your company is giving you money, I'm kind of on the fence with a Roth 401k because it's already taxed, and the money that your company is giving you is already taxed. So you're not necessarily having to worry about that later on, right? Because if your account, let's say you've got a regular 401k and a Roth 401k, and they both grow to $1 million, and you withdraw 30%, well, the 30% on the regular one, you're going to pay nice big tax on 300 grand.
Mhm.
But with the Roth, you pay none. But again, the drawback to a 401ks in general is you just have no control over your future. And if you're okay with that, that's cool. If you are able to continually, so that's the other thing. So you were talking about taking the Roth money from your 401k and rolling it into a traditional IRA, or you have a regular 401k and a Roth 401k.
So originally, I only had a traditional 401, and they started giving us the option now to do a Roth. So I started jumping on that. So pretty much, I do 15% of my paycheck into a contribution, and I split it up 10% into a Roth and 5% into a traditional 401.
Gotcha. Okay, so I would stop the traditional.
Okay.
Guaranteed. Definitely stop that. The Roth, I'm on the fence. Um, the beauty is when you do retire or when you quit that company, I think you can do a one-to-one rollover in a regular Roth, right? From the 401k. So a 401k Roth, I'm pretty sure you can roll that into a regular Roth under your name, right? You just may not be able to continue to contribute to it, but you can roll. I guarantee you can roll that at some point. So maybe consider, I mean, if you've got enough capital in the Roth 401k, maybe consider rolling what you can out of it into a regular Roth IRA, right? It's gonna give you, again, like I said, the ability to manage your own future. And I think everybody should have that ability.
Yeah, I guess I'll have to call Fidelity and ask them if I can take my Roth contributions and put it into a Roth IRA.
Yeah,
Because that
definitely.
money was contributed already. I have one more quick question.
Sure.
So my company also gives me a discount on their stock. I get a 15% discount on purchase, and it's averaged out over the quarter. So, I'm buying them at a discount, and they're restricted for 90 days before I can do anything. So I've just been doing covered calls on them because I got quite a bit of shares. Is that a good idea to continue doing? I mean, the stock doesn't really move much.
Yeah,
But
absolutely.
I get a discount on it, and then obviously I have to pay because my cost basis is way lower than what the market price is. So it's just a profit right there.
Yeah, I would definitely continue doing covered calls on that.
Okay.
I don't. To give further analysis, I'd have to know what the company is. But if you want to DM me that, I can look at it sidebar. Because I wouldn't recommend telling everybody here where you work.
Yeah. No, I know.
But I mean, I can do that. If you want to DM me the ticker symbol, I can do a little bit more of analysis on it and see what kind of situation you're in currently with covered calls, right? So.
Yeah, I got a bunch of stuff expiring tomorrow, so I'm going to be selling stuff for April.
I got you. Okay.
All right, cool. Yeah, I'll hit you up. Thanks, man.
All right, you're welcome. Okay. Michael and Chris, you guys have your hands up? I'm not sure which one of y'all raised first, but somebody go.
Do you think what do you think about SNDL?
That's not one of the tickers that I watch often. Let me take a look here though. I'm not sure. Somebody here trades that pretty often. It's just the thing I don't like about SNDL, man. It went down to 14 cents at some point. It's still pretty low in value. I mean, it was all the way up to $13 at one point. Previously, let's see how far back this thing goes. Yeah, it's such a new company too. I mean, I just don't like new stuff like this. I mean, it IPO'd at 13 something and then got crushed down to 14 cents. Things that are really low valued like that, I tend to stay away from because 9 times out of 10, and when they don't do options, but this does, I just think that it's risky to play things that are very, very cheap, right? Because as you can see, at $13, they got crushed. It took a year for them to get murdered. You know what I mean? So And if you look at the MACD, I've never seen a MACD look like this. I've never seen one look like this, where the fair value line is way up. I've never seen that. I mean, this is crazy. Let's see.
So you wouldn't recommend like set option on that, right?
I just don't know the company well enough to say anything about
And then
long holding, and I
yeah,
also don't like the long hold. I flip everything.
yeah,
So
I mean they give the earning the quarterly earning yesterday, and then they're doing pretty good at the moment. The fundamentals is pretty good at the moment too.
yeah, like I said, I don't know too much about them, so I can't give you a
Yeah,
real information on what I think about them.
yeah, I got it.
I can only tell you what I see on the chart.
Yeah, on the chart. Yeah.
But there is, I don't know who the analyst is, but I'd seen someone trading this, an analyst. So
Alright.
maybe see if you can find who that is, or wait until somebody posts an alert for SNDL, and then you can maybe approach them with questions.
All right, no problem. Thank you.
You're welcome.
Alright.
Chris?
Yeah, man. So I had a question about a strategy that I'm starting to develop, maybe.
Okay.
So what I've been doing here lately, and I've seen it work for the last 3 weeks on different tickers, but the last one that I did was well, I did two. I did multiple, but the two that I saw go positive were CVS and Best Buy. And so what I've been doing is spending a lot of time on Sundays, charting support and resistance on the weekly. And then what I do is kind of go to today, right? And I look at those same resistance and support lines, and I kind of see, do those kind of add up on the, do they match up on the day, right? And then, so come Monday, well, actually, there's another thing that I do though. I also look for kind of like a hammer, right? So as I'm looking for tickers to chart, I look for stocks that have had a hammer. They're climbing up. They're going to a point. They pass like a resistance line, right? I mean, I'm sorry. They pass a support line, and then they are coming up on a resistance line. And so then what I've been doing is kind of going on that day of, right? Let's say it's real super close to the resistance. Then on the day of that it hits the resistance, I kind of reduce to like 30 minutes, 15 minutes. And if I see like 3 or 4 candles that are growing, it passes that resistance. I actually haven't bought on anything but I've seen every single time that it's gone up. Like if it passes that, I just wanted to see what you thought about that. Like it keeps growing.
Which ticker are you talking about?
So like for this past week, right? I looked at CVS. So I have my computer up there. So I had, CVS.
Okay.
Now my computer's frozen.
You're talking about the 1 year, 1 day, and it passes over a certain resistance point, or?
So like on this past week, right? I was looking at CVS on the weekly, right? Look at CVS on the weekly, it's been kind of trending up. This was this past week to, I guess, the last 2 weeks, right? There's other ones that I do that I have more
So
involved.
let me make sure you understand your terminology, right? So when you say weekly, so the way candle time frames are understood, right? You have the time frame, and then you have the candle, right? So if you go 1 year, 1 day, that's a year's worth of time, and each candle is 1 day, right? If you talk about weeklies, 3 years, each candle's weekly. Does that make sense? So when you're talking
Yeah.
about weeklies, are you talking about 7 days, 10 days, 15 days, and 5 minute candles? Or are you talking about 1 year, 1 week candles?
Well, maybe I'm confusing how I've been charting because okay. So I'm looking at Webull. I don't know if you're that familiar with it.
I've used it.
Okay, so at the top it says interval, and it says 1 minute, 2 minute, and on to year.
Okay.
At the bottom of the chart it says range, and it goes 1 day, 5 day, 1 month, and 4.
Let me see. I got Weeble. Shit. Trying to remember how to. Okay, here we go. So, move zoom. All right, tell me what you got, or tell me what you're doing here. Tell me where to go.
Okay, so let me zoom up on the screen. Okay, so so you're on CVS, right?
Yep.
I don't see on your screen where it shows the intervals.
Down here at the bottom.
Okay, so I've been going a week. I'm sorry, week.
This one.
Yeah.
Okay. This is weekly candles.
Yes, that's what I've been doing because
Okay.
I spend a lot more time charting on Sundays.
Gotcha. Okay, so yeah, this is a weekly candle with what looks to be at least 1 year of time frame on mine.
Okay.
So you
So
said you were able to adjust the time frame plus the interval?
I
Right
think
here.
I pretty much zoom in and zoom out. But maybe I just need to be a little bit more clear. So what I've been looking at is just like what you're looking at right there, right? So imagine that last candle's not there, right? Because that last candle is showing this week, correct?
Yep.
Correct.
So what's the time frame as far as how far out you want to look? That's what I'm trying to understand. So I get that you're looking at weekly candles now, but what time frame are we looking at as far as how far out in date? Right? So you're looking at 1 year out, you're looking at 5 days. I mean, 5 days is going to be like, I don't even think you can do weeklies on 5 days. Can you? Yeah, it's so yeah, it looks like it automatically, now that I see it, looks like it just kind of automatically picks for me the time frame between the chart and uh, the 30-minute candles, right? So if I got 30-minute candles, it's giving me what looks to be about 2 weeks of time frame. 5-minute candles looks like it's giving me days. Let's see, 15, 16, 17, 18, 5 days, right? If I'm using the 1 hour candle, it's giving me 3 months. The day candle is giving me 6. Week candle gives me, actually, now the day, more than 6 months. It's giving me about a year and a half, roughly.
Yeah. So kind of what I've just gone to the week and kind of looked at what it's given me,
Okay.
right? Like get that for you, right?
So is this what yours looks like when you go to the week?
No, not at all. Actually, I don't know why yours looks that way.
I'll tell you what.
But also, I don't have that. I was gonna say I don't have that right side on mine.
Hold on. See if you can share your screen. Are you able to share your screen?
Hold on, let me try.
So just I just sent it to give you a.
Yeah,
That's not.
the.
That is not screen sharing. You're showing me your living space.
Yeah. Well, I'm trying to rotate it. How you rotate it?
No, don't do that. So stop that. Go. Shit, I don't know if it's.
Okay, maybe I can just turn my phone around. I don't know how to make it. Here, try it again.
I'm not sure if I need to be able to be on the other end, but I guess that works. I can kind of see what you're trying to do here.
So what I've been doing is doing. Can you see that? Is it
Yeah, I
on?
can see it.
So what I've been doing is trying to chart, kind of like on the weekly, right? And kind of seeing like a downtrend. Now this is just, what is this one? This on CVS. So this candle showing this week,
Right.
right?
I gotcha.
So I saw that, I saw this downtrend and I went over here, right? I already had this resistance line there. So then whenever, like come Monday, oh, I'm sorry. At the same time, I was also looking at day, right? So I charted this on Sunday. I look at it and go, okay, well, it's also kind of hitting a resistance point here, right? Where it closed at on for the week prior.
Support. Support's the bottom, resistance is top.
Yeah. Well, see, and that's the part that I get confused about. When I see a green candle hit the top, and then I also see that it has a wick go up, but it doesn't hit there and it comes back down here. I almost see that as a resistance point.
Yeah, it's
to a
resistance there, right? But once it breaks it and goes above it, it becomes support.
So no matter what, that needs to be the way to think.
Yeah, I mean, typically that's how it works, right? So you've got support resistance levels that you can chart. You know, okay, I get what you're doing out here. Let me have my screen back. Go ahead and in your thing here, and then I'll show you what I'm talking about.
I don't know how to do that.
Let me see. Oh, I got it. There we go. Okay.
Right.
So on mine, number one, I think using weeklies is probably a little too much. I would go with a 1 year, 1 day, right? Because again, with a weekly, it's going to be really, really tricky to see this time frame right here, right? So I would go with 1 year, 1 day. Okay, so 1 year time frame, 1 day candles, right? And then what I would suggest is stuff like this, right? This is going to be support. This is going to be resistance. Oops. You got resistance here, right? So again, once this area breaks above this resistance point, this becomes support, right? Because if you see, let me zoom in a little bit. If you see right here, you've got 1, 2, 3, 4, 5, 6, 7, 8 candles that are bouncing off of this line, right? Once it breaches it, then it becomes resistance. And it comes back under, and now you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles hitting resistance.
So you should probably pay more attention to, I mean, well, not pay attention to, but notice when a support becomes resistance and a resistance becomes support.
Yeah, I mean, like I said, you got to be able to understand when something breaches through a one of those resistance or support levels, it becomes the opposite thing because it's no longer a resistance level. It's been broken, right?
Yeah.
So short term, it becomes support, but long term, it can still be considered resistance. Here's an example. All right, so again, let me draw a little bit here.
Yeah, I see that right there. You had a resistance and it became support.
Yeah, so resistance, resistance, broke through, became support, broke through, became resistance. hit resistance again, came back down, hit resistance again. All right. You see how it bounces off of it. It doesn't matter which side of the line it's on. All that it matters is the line is there and it's using it as support and resistance based off of whether or not it's below or above that line. Does that make sense?
Yeah, I get that.
Cool.
Okay, all right, man. I appreciate it.
Yeah, you're welcome. Okay. Let me see here. Ashley, she's not here, so I guess I'll skip that question. Let's see. G. When you close a CSP, you use the collateral or new buying power. Sorry for the questions. It's fine. That's what we're here for. Ask as many as you got. So when you close a CSP, your collateral is just being tied up. If that makes sense. It's not in use. It's just on hold. Right. So think of this. Like if you ever rented a U-Haul truck and they say, "Hey, give me your credit card. I'm gonna put this truck on hold for you, and we're gonna charge you $200." Right. And then when you come pick up your truck and you use it and you bring it back, we're gonna charge you the difference what you actually use. So let's say you only used $100 worth, they're going to refund you $100 worth. It's very similar to CSPs. If you go in the money and your premium's still intact, meaning it hasn't gone below your break even, then they're going to take your premium. I'm sorry, they're going to take your money that's on hold, which is in the U-Haul scenario, $200, and then whatever you get assigned, wherever you're at, the difference comes off the top, right? And if you're, so again, if your premium, let's say you're at a $50 CSP and you get a $500 premium, and the stock ends at 47.50, in this scenario, I'm gonna go back to U-Haul, right? Use that same scenario I just said, and now we're at U-Haul and we got the $200, right? So at 47.50, so again, let me start over with the example. The 50p, if I go in the money, it gives me $500 premium. I go in the money at 47.50, right? I'm at 50% loss on the total premium, but 50% profit on the position, right? So then when I use the U-Haul example, we're going to hold $200, okay? And then once you bring the truck back and you've used it, we're going to charge you the difference. That's what's going on here. So the option is the U-Haul truck, and the money that they put on hold is your $5,000, right? And out of that $5,000, you used $500, right? So that means it's against you, right? So in that scenario, they're just going to say, all right, here's the remaining balance of what you what we charged you that you didn't use, right? And I hope I didn't confuse you guys with that, because I feel like I'm confusing. That might be a little confusing. Hopefully it answers your question, G. Please do feel free to speak up on the mic though, to make this a little easier. So let's see, more questions. So Nomad 22, you're looking to sell covered calls on PLTR. Expiration is 4/1. Intent is to do it tomorrow and collect premiums. That's not bad over the weekend, or collect theta over the weekend. I mean, I like doing that. OI sounds great. Only thing that I would advise you to do is wait for PLTR to pump. So if it goes to $26, $27, now sell the covered call. Don't do it right now while it's at a low. So you're just asking to not really make much. Right? Wait for it to do its thing, wait for it to pump, and then sell that covered call. Never sell it below. Actually, yeah, if you want to do the 35, yeah, that's great. That'll put you at a $7 gain on those shares in case you get called away. Let's see. You say 4-1. I mean, you're only going to get $15 for that. That's kind of worthless, in my opinion. I would probably go maybe to the 9th, and I wouldn't even. Yeah, I definitely would tell you to wait for this thing to pump. Wait for it to go up to 26, 27, and then start looking to sell something here. But the 35p, I mean, you're going to have to go a little far out to get some decent premium on that, even if it pumps. I'll be honest with you. I would tell you to go for the 30p first. And frankly, the $28 to $29 area is a resistance point for PLTR, it looks like. So let me just take a quick look at the chart. I'm going to share my screen again. Okay. Oops. Let's go back to the 90. All right, so 2750. That's a resistance point. Stock price hits 2750. You sell cover calls on the 30 or 30. I mean, you can try to do 35. You might get something decent. You might get like $50 per. But you can see here that the 27.5 is somewhat of an okay resistance point, meaning it's going to take a little bit for PLTR to break through that, right? So I've got a few areas here that are resistance at 27.5, and the more areas you have that are resistance, the stronger it becomes. So if it was just strictly this by itself, that's pretty weak. But now that it's got 2 points, it makes it a little bit stronger. But then you go further back, and it looks like you got this whole entire section, right? And then you got some in here, right? So it doesn't look super strong as far as each individual point of resistance. But when you go across and you have 5 all on the same spot, it makes it a little bit tough to get through, right? So I think that's the key thing you should really pay attention to is resistance levels. And when a stock that you own shares on hits that resistance level, that's when you want to sell it, sell calls. Let's see. That makes sense, Nomad? I'll take a look at IDRA, Michael. Oops. I never heard of IDRA. Oh, ugh. Stay away from that. What the hell this is, but stay far away from this. This is disgusting. That is absolutely disgusting. I mean, that's like, how far does this thing go?
How does something like that happen?
No idea. Bad news. Maybe they had some kind of FDA approval not make it through. CEO might have been embezzling funds. I mean, who knows? Only thing I could say is to go out there and see if there's news on it, right? Beyond that, something made it happen. Do that, right? Something made this thing get phone checked. But the weird thing is, I'm not seeing it on the rest of the charts. That's what only the 180. Let's see what it looks like. The rest is yeah. Okay, so the 180 and earlier, definitely seeing this thing. I have no idea what caused this. Definitely would suggest looking into reading up on it and learning why this thing fell like this. Because if it fell hard like this, what's to stop it from falling further? What's to stop this thing from going completely out of business? If this goes under $1, it's going to get kicked off the New York Stock Exchange. And you know what they do in the scenario that happens? They do reverse splits, and that devalues your position. So this is at risk of that, in my opinion. Let's see. Chris, that ticker is IDRA. You probably shouldn't even pay attention to it. Let's see. Oh wow, IV is monstrous, but look how crappy the premiums are. And look at that huge spread. I'd stay away from that, man. I personally wouldn't touch that with a 10-foot pole. It's kind of like my friends used to say, I wouldn't fuck her with your dick. Okay. Who else? Who else has questions? I think I'm finally getting caught up. Oh, Ashley, you're back. You had a question earlier about which tickers do I like for covered calls?
Yes.
I like Fastly. I like Laser. I like Lee, Neo, PLTR, QS, and T triple Q. TNA as
Triple
well,
Q.
but TNA is a little expensive, so I stopped messing with that one. FaZe loves TNA, and I was talking to him about it, and he's like, yeah, it's at 90 plus, it's just a little pricey, and other thing is like, so I'm gonna look at this 8 days out. All right, I'm gonna show you premium difference on these two, TNA and T triple Q. Funny thing is, TNA and T triple Q are literally almost the same exact thing. There's a slight difference in holdings.
What'd you
Okay.
say before Laser and Lee? Neo?
Neo, yep. Neo, PLTR, Fastly, FSLY. This is my list here. And I'm probably going to remove Plug. This thing got caught up in something, but I don't know. It's actually holding pretty
Caught
well.
up in that really hurt me too.
Yeah, I bet. I mean that drop was like $10 drop on that thing.
Are you sharing your screen?
Oh yeah, no, I'm not. I'm sorry. There you go. You should be able to see it now.
CRSR, you like that, Corsair?
Yeah, I like Corsair. Yeah. Right now the premiums are kind of trash. So the thing is, when it was during this time frame right here, this thing was paying out great premiums. I was seeing $500 to $800. Now it's showing $1.80. That's crap. But at some point it'll come back and be back up there. I think when it hits the $35 area, we're gonna see $500 to $600 in premium on this one.
Well, this is the time I think to get your 100 shares, right? Because you need 100 shares of them.
Well, the thing you could do is sell CSPs on it. I mean, if you want to, if you just strictly want to stick to covered calls, yes, now's the time to grab shares. Get it right here. This is a great price in my opinion. I mean, you see it; it's just below that support level. Let me see if I can go further out. Yeah, so I mean, it's holding this area fairly well, and it's still below that level. So this is acting as resistance, right? So just clean this thing up some. Whoops. Okay, I think that's probably okay. So this entire area right here is it's trying hard to get through that support line that became resistance because it went under it. But as you can see, you've got this point, this whole area, this one, even this nice lovely wick. Those are all support areas, right? And then now you just got one huge resistance point. But the moment it crosses over this, I'm going to consider that support. Right, so it goes into another field, basically. It's like a basketball court. You know, this side of the court's that team, this side of the court's our team, right? That's kind of what this does. So you go from defense to offense, kind of thing.
Got it.
But yeah, this one's great, especially for cover calls. Yeah, I mean, because once it starts trying to pump back up again, you know, like I said, it hits 35 plus, you'll see nice premiums on this. I mean, it's already talking about 460, and the IV is,
So that right there, when you sell the put,
you talking about this?
you said for at 35 strike, it's gonna be 460.
Yeah, that's the put side, right? So the reason I'm saying 460 here is because the moment you get to closer to this, right, it's gonna fluctuate. It's gonna seesaw over here. So if you see the in the money side over here, right? So if you look at the difference, so at 30, so at 25, it's showing 760, right? So and better yet, I'm sorry. Let me just this thing's bother me. So if we look at the in the money on both sides, right? So 35 and the 30, right? So the 30 on the call side, 35 on the put side. Both of these are relatively around the same value, 390 and 460, right? And to me, that's basically like I look at this like that's a bid ask in a way because the moment this stock moves up to 35, you know, this price is going to change, and so is this. And once it becomes in the money, it gets nice like that, right? But as this price moves up to 35, it's going to start taking the premium from this side and transferring it to this side, right? So just kind of pay attention to that. Right now, it's hard to see because the premium just not there. Let me see if I can get it on laser. Yeah, see, this is fair, right? 180, 185, right? 190, 155, and then you come up here 155, 205. So it's like kind of the same difference between all of them. And when you're like at the money, basically, they should be relatively the same value, right? Sorry, it's 150, 180, not 185. Does that make sense?
So that 30 cents difference is better than the 60 cents difference on the poster.
Well, the only reason I was showing you laser is because the IV is higher, so it helps me explain a little better how the premium, as the value of the stock moves up, the premium changes in relation to that, right? So if the stock's at a low, then the premiums are going to be higher in the money. But the moment it starts to move up in value, those premiums are going to shift downward into the out of the money area, if that makes sense. So right now, a CSP on this is trash, right? It's one of those scenarios where I know this has great IV. I've seen it, and this is probably a solid entry as far as shares. I think it's definitely worth looking at as far as that goes. Right? I'm only really interested in CSPs at the moment because, well, let me back up. I'm not interested in anything at the moment because I'm so deep in my portfolio that I can't even buy anything hardly. So I would probably buy some shares on this one if I had the capital. I don't have $3,000. I don't have it right now. I've got about.
Dang, bro, overextended.
Oh yeah, I'm super far in, but I mean, I've got average down positions, so that's why I'm so deep. I got Neo average down. I got PLTR average down. I got Laser average down.
I'm the
Fast is
same
the only
boat.
thing that I haven't averaged down on. So I'm pretty deep because of that, right? And that's the whole purpose of saving some of your capital so you can average down. I just did it a little too soon.
I had to buy the dips twice.
My point exactly, right? Buy the dip. So I just did it a little too early, you know?
I think this got a little bit clearer about the cash secure puts tonight.
Well, you missed, I think you missed some, didn't you? Saw you here
I
and
did.
then you left. I would
Yeah.
say rewatch it the first maybe 30 minutes, 45 minutes. I was strictly talking about CSPs and covered calls, the wheel strategy. So I think,
Did you have your screen up earlier when you were discussing it?
nah, there was nothing I was sharing. I was just talking.
Okay, I was there. I was there for that.
Okay.
Yep.
I wasn't sure. I just saw you kind of come in and out, so I wasn't sure if you had heard all of it or not.
Thank
So,
you.
so does that help answer the questions and all that?
Yeah.
Okay.
Yep. Keep learning every day.
That's it. All right. Let me just read. Let me jump back over to YouTube. I've been kind of neglecting YouTube. Sorry, YouTube. Let's see. Oh, Archon. I see you. Archon asked about Apple and gaps. So this is one gap that I think we may or may not see get filled. And let me reshare my screen. I'm not sure if Archon's still in here. Let me see. All right, I'm gonna go ahead and talk about it anyways. So Apple has a gap. It could fill. I don't think it will, but it could. I do say all gaps get filled, but this is one of those where I'm like, that's a stretch. That's going to be a super stretch to fill that one. We're basically looking at this. That's the gap. I mean, Apple's really got to get crushed to not make it down to that gap.
What price is that?
It's low, 90, 96 and a half. I don't see Apple doing that. It had trouble doing it before when it did its first run up to 136. Right, then it came back down. It just didn't do it. Right, that would have been the time to fill that gap. I don't think this gets filled. Personally, I just don't think this one will. If it did, I'm probably going to buy 100 shares of it if I got the money at the time. Oh, I see Archons. Archon, did you get that? Did you get what I said? Yeah, if this thing fills, I expect the whole entire market to be crashing. That's a monster fill. I mean, going that low, man, that'd be pretty insane. I mean, maybe in September, October, if this stays in this range bound area, then yeah, maybe in the negative months, but I don't see it happening. I think Apple by December will be near 200 personally. That's just a wild guess though. Let's see. Gotcha. Okay. You got it.
I got a gap question.
Go for it.
So it's on a ticker, solo or not solo, SOS.
Sauce.
So would you consider that big gap up filled? If
This
you kind of
one?
zoom in, yeah, if you kind of zoom in on it and actually look at the bodies, there's no full bodies consuming it, but there's kind of like half bodies and like, I don't know, like what's the tolerance on it, I guess, maybe, you know?
So let's get closer. All right. So how gaps work. So initially it had this huge monster gap. Oops.
Yep.
All right, I got this one right here. To fill this, the price just needs to go through it. Right? Follow me? Price went through that gap. So let me see if I can.
So even if it gaps over the gap, kind of, it's still valid.
Yes, yes. So,
Yeah.
Damn it. So let's just do this real quick. Maybe this will help illustrate it a little bit better. Gap up, I mean this monster gap, and then it came down. Right? All it needs to do is have the price blow through that. It doesn't even have like it could create another gap from here to here. It still fills this gap.
Okay, that answers my question right there.
But you got a gap right here.
So it creates a new gap on the way down, though.
Well, it did create on this in this particular scenario.
Yeah,
Yes,
yeah, yeah. Well,
it did.
This one, yeah.
Yeah,
So the
definitely.
new gap is what you pay attention to.
Yeah, yeah. I mean, it looks like that's kind of a resistance level too, because you got 1, 2, 3, 4, 5, 6, 6 day candles bouncing off of the bottom of that gap. So I would say, this one, once it breaches the bottom of that gap, it's gonna fill the top. But we're not looking at too much of a gap in price, right? 881 to 982, so $1. So 15%.
Yeah, yeah. That's a shoot. Is that a shooting star at the end?
Nah, that's got like a little wick on the bottom. The shooting star must have full body from
So
this
no
point.
wick on the bottom at all.
Right, right.
Okay.
Could be also considered a hammer if it was a little bit thicker.
Yeah.
So shooting stars are thin, hammers are thick.
Yeah.
Kind of thing.
And another quick question on the indicators. You were mentioning that, like, they're lagging indicators.
Right.
How far do they lag? Are we talking like days or like
No,
minutes or hours or?
I'd say, like, if I go to 5-day, 15-minute, I think it's based off of the candle time frame.
Yeah.
So it's a 15-minute lag. So this isn't gonna necessarily move until that candle gets created. Once the candle creates, it moves. Does that make sense?
Gotcha.
So however many, whatever the time frame is on your candle, that's the time frame of this thing is gonna lag behind that candle, because once the
Yeah.
candle is done and moves to the next one, that time frame's over.
Yeah. Then the bottom can process what happened and give you the output.
Exactly.
Yep. Cool. Sweet. Thanks.
You're welcome. Good question. Everybody's got good questions. I like it. I'm a fan of great questions. Who else has them?
Hey, I have two questions.
Okay.
This is really speaking. When's the best time to sell cover calls? When the market is going up?
Best time to sell covered calls.
Like when is the best time to enter?
So if the market's going down or up, it doesn't really matter. What matters is the pump of that particular wave, right? So example, I'll use SOS as an example just on the chart. So if I wanted to sell cover calls on this, and let's say I got a pretty solid break even at like $6, right? I want to sell covered calls on this. Let's say I just learned about it and the price right now is at $7.50, right? And then the day starts, price jumps up here, 860 something, almost 8. I mean, that wick says 886, but I really like bodies, right? So when this thing pumps up like this is where you sell that covered call. Doesn't matter if the market's going down or up. You take advantage of the pump, right? Because then the moment it falls again, so let me redo this. Redo that. Okay, I said nice. All right, so you're gonna get in here with the covered call, and you're gonna get out right here,
Okay.
right? Or if it takes a little bit more time, let's go to PLTR since that one's got a lot of movement around. And I can go to like a 60 here. So with PLTR, let's say I own shares at $30 right here, right? And the
okay.
stock price has fallen down to 20, and then it pumped back up to here at 27 something, right? And you get all these resistance points, right? This is where you sell that covered call, and then it falls, and you get out, right? So I said 2 to 3 days, sometimes a week, right? It usually doesn't take more than that, unless you just got in a bad time and you got poor timing and you chose a bad this and bad that. But this
So-
is the scenario, right? You get in
So it's
here.
whenever there's a huge pump, like in the like morning or something like that.
I wouldn't say huge pump. I would say move.
Like a big movement.
Yeah, big movement in one direction, and it's potentially hitting resistance, like PLTR hitting resistance. So that tells me that 27.5 area is super solid to sell covered calls on, right? That's why I average down on the 25 Ps. And if it expires tomorrow under 25, I'll have 300 shares of PLTR. My break even, so I've got two 25 Ps and a 30 P. Right? If I get a sign, my break even is going to be 26 and a quarter. Right? So if I can sell that 27 and a half, when that jumps back up to 27 and a half, I'm going to sell it right there.
Okay, got it. Thank you.
You're welcome.
My next question is when do you have a strategy for averaging up?
I don't average up.
Oh, okay.
Is that all you had? Any other questions?
Yeah, I just had these two questions. I just
Okay.
wonder how people usually average up.
Yeah, I don't recommend doing that. I mean, you're chasing, basically, is what that is. So, if you got in, like, basically, if you average up, you didn't put enough money in from the start, and that's kind of why you're averaging up, right?
Yeah, that's the strat. Instead of averaging down, you're averaging up.
Right.
You put less money in the beginning.
So the beauty here is, and so this is what I teach people with shares. You get into something, it starts going up. Take the profits and walk away, right? But if you get into it and it starts going down, now's your chance to throw more money at it, right? And then once it does start going back up and it hits the profit target you were looking at or looking for, you're going to have a lot more money than you did had you got into the position and then it started going up and you started averaging in as it goes up, right? It's going to be less profit when it goes up from the get-go. It's going to be more profit if it goes down and you average down and then it goes up. That's what you want if it's shares. Options, I don't know what to tell you on that. I definitely wouldn't average up, but I'm assuming you're talking about shares, right?
Nah.
Ooh.
I was talking about options.
Ooh.
Oh, it's okay. I'm just wondering.
Triple negative. I'm going to alert support about you.
Oh, no.
Yeah, don't do that. Not with options. If you want to average down with options, all right, whatever. But I definitely would not average up.
Like, since you don't know how deep the market goes down, so then you average up when the market pumps up.
Yeah, I wouldn't do that.
No, okay.
I mean, especially if you've got an option, it's just going to gain value the whole time. It's not like shares where I only bought 100, but I could have bought 500, and I would have 5 times the value. Whereas with an option, if you buy one option now, and then it starts pumping, and then you try to jump in again with another one, that value is going to be minuscule compared to what that first option is going to be paying you the whole time. Right? It's better to exit the position and get into a new one instead of averaging up.
I see. Okay.
Get more time. right?
So
So
yes.
if you're in a position that's got 30 days expiration and you get out with profit, get back in with a new one, a new position, and go double the time. So 60 days out now, right? So every time you average down, double the time,
Oh,
because
okay.
or every time you average up with an option, like basically say you sell the position for profit, then you get back in, you're going to want to double the time frame, because the higher it goes, the more chance and probability that it's coming down.
Hmm.
So you want to give yourself enough time to where it has that time to fall and jump back up.
Okay, got it. And you just buy the same strike price, right?
Yeah, you could buy the same. Well, no, because you'll probably be in the money. I would stay at the money.
At the
Always at
money.
the money, as long as open interest supports your position.
Okay, got it. Thank you.
You're welcome. Okay. Who else has questions? Let's stop sharing so I can see the chat again. G asks, what's the max percent of my portfolio at start of CC or CSP position? Well, to be honest, with CSPs, I would say that you should be doing nothing but CSPs and covered calls if that's your strategy. I wouldn't try to mix in shares. I wouldn't try to mix in other types of options. I would totally split that up, put that in a different account. The reason being is because CSPs require a large, substantial size of your portfolio to get in positions, right? If you've got 50 grand, or let's say you've got 20 grand or 25 grand, I can probably get in 5 to 7 positions, right? It's not really a lot. And that's like maxing the portfolio out. 25,000, $5,000 a piece each position. That's 5 positions. You can get a couple of PLTRs, get some laser, get it one Neo. Maybe you jump in and get a Fastly for 70, right? I mean, it's just one of those things. You got to have a decent sized portfolio to even start these kinds of strategies, because if you don't have the capital, you just can't get into the positions. It's just not financially possible. Let's see. But I guess really to answer your question, 50% of your portfolio max, never more. If the market starts going down, you're 50% in, you can average down and save yourself instead of going too deep. And then you just got to sit around and wait. And that's not fun. And that's the beauty of the wheel strategy. There's no waiting. You're making money no matter what, as long as the stock price doesn't get murdered. Right? You sell CSP, you get assigned, keep the premium. Even if the stock price is $2 or $3 below where you got assigned, you can still sell that same strike and still make money while you're waiting for the price to come back up. Win-win. Small accounts, what should they do then until they've got enough capital? I would tell you that they should be trading shares, Marcarius. Very unique name too, by the way, Marcarius, if that's your real name. Yeah, cool. Yeah, I would do shares, man. I wouldn't I wouldn't do any options until you've got 5 to 10 grand. I mean, 5 grand can do it, but you know you're extremely limited to what you're able to do. You know what I mean? So I think shares is a better way to go as far as that, until you've got enough capital to start doing multiple CSPs. Hope that helps answer your question. I got like something in my sock. It's stabbing my freaking foot. Phantom splinter. Okay. Let me check back on YouTube. See if there's any questions there. Nope, still there. Okay, so all caught up on chat questions. Who else has any other voice participants have questions?
I have a question. What do you think about poor man's cover call? Since you sell premium, could I follow up with that same strategy?
You could. It's a little bit different. We talking about diagonals?
Yeah, like since I don't have the capital to buy 100 shares, can I just buy opt deep in the money option?
I mean, you can. You can, right? I mean, that's a strategy. That's one of the strategies. The profit though isn't as nice. I mean, it's still decent, right? Don't get me wrong. I like doing diagonals and calendars on things that are expensive, things that I can't afford, and that kind of sounds exactly like what you're saying, right? So if you can't afford it, then maybe that's a different kind of strategy that you could utilize.
Okay.
Okay. Let's see, Michael.
What is Pullman cover call? Like I heard of it, but like I never like watch sit and watch a video of it yet though. Can you give me like a quick definition, like how it works?
It's just like buying a call in the money and then selling a call out of the money, right?
Oh,
And you basically exit both at the same time when the profit's there. I mean,
oh,
you could split them up and exit differently, but so when I do diagonals and calendars, or diagonals are specifically poor man covered calls. Calendars are very, very similar, except so a diagonal you're selling two different strikes, one in the money and one out, whereas a calendar you're selling two at the same strike.
okay,
So
okay.
it's very, very similar. And I would really never recommend doing this kind of strategy unless you're buying leaps and selling calls against those leaps.
Okay, I see.
Because that way you can potentially get paid for that long position that you bought the leap in 3 to 6 months. Well, 6 to 8 months really is kind of more realistic. But the goal is in 3 to 4 months, you want to have made a decent amount of profit on that short or that out of the money. So let's just talk about diagonals right now. You want to have made been in and out of that short call multiple times in 3 to 4 months, and then by then you want to be able to get out of that leap for profits as well. So the idea
Yeah.
is to make money on both sides.
Yeah.
And the way you can do that again is to sell long year out leaps, and then you can sell premium against it. I'm sorry, buy long leaps, sell premium against it in 3 to 4 months, and you should be able to have profit on both ends. But it's one of those types of plays where you got to kind of understand what it is you're doing exactly. I actually have a video of calendar leaps. You should check that out. Like I said,
No problem.
the only difference between a diagonal and a calendar is the diagonal has an in the money call, long call, whereas the calendar, I'm going to probably do something at the money, and I'm going to sell, not necessarily at the money, maybe like 3 or 4 strikes out of the money, and I'm going to buy leap there and sell a short front month call on that as well, right?
Yeah, it makes sense. All right. Thank you. And then one more question is I have a $10 put on GameStop, right? Like I had that for like a while now. I bought like 3 contract, $10 put. expired April 16. Right now, I'm down like if I check right now, I'm down like 90%.
Hmm.
Yeah, so I'm looking at like I'm down like 285 out like 300 something. So I wanted to ask you like, what should I do right now? Like, should I just like
Wait,
take the
what's your expiration?
April 16?
It's in a downtrend for sure.
So you think like I could profit
I'm not saying you can profit, but you can probably get some of that money back. I mean, you said how much percent are you down?
90%,
Yeah,
90
ain't no point taking that 10%. I mean, how much is that 10%?
$30?
You might as well let that sit. There's no point in letting that go.
so so I should just wait, right? Wait and then just take whatever like I could get more than that. You think?
Sorry, what's the expiration again? 419?
Yeah, 416.
416. Okay, so
Yeah.
one, two, three, four, shit, 4, 5. You got 5 weeks. When did you get into it?
I think Eben's like I think Eben's like I don't remember, but he was like let me see right now. I think February.
February
What's your
what?
strike price?
Yes.
What's
Oh,
the
this
February date?
I think it was the February 10th.
Oh man.
No, it was the February 2nd. February 2nd.
Well, it's still not that great.
Yeah, February 2nd. The total was 215.
Yeah, so it looks like you got in when it was at like $91 and then it ripped. You should have
Yeah,
got
yeah.
out when it hit, the $50 area. That's when you should have got
Yeah. I saw that, but like I was like, he's gonna keep, I'm gonna get more. So
out.
I was like, I'm gonna get more, and then I didn't get out, and then next, and he never went that price again, never, you know.
So the thing I recommend with options, and this goes for anybody and everybody buying options, as soon as you see an okay profit, take it.
Yeah, just take it.
Because you see what you're suffering, right? You probably had what, um, I don't know, $50 to $75 in profit.
Yeah,
Yeah.
right.
And then now you're down 200 something. So
Yeah,
I
yeah,
would
I had
rather
like,
much take that $75.
yeah, and I've been waiting for so long, like damn, GameStop, and then last week, I think 2 weeks ago, I see it pump back up. I'm like, oh shit, damn. But
Yeah, I mean,
sometimes,
you've got 5 weeks, but you've been in it longer than 5 weeks. That theta's already been decayed on that position
yeah,
quite a bit. You might be lucky to get 50% back, but it needs to
yeah,
drop hard and fast and now.
yeah. But sometimes I go back to the chart, and I went back all the way back and see like the time I was supposed to get the profit, I didn't get
Well, lesson learned, right? Hopefully you didn't
it.
go 100% in. I don't think you did.
No, never that. I think it's because like I made some money off like I got lucky on some auction call, so I used that money. I didn't care. I was like, I just threw that money in it.
I got
Not
you.
like,
So yeah, that's profits. All right. All right. Fair
yeah.
enough. Fair enough.
All right, thank you, appreciate it. So I'll wait and see if I could get at least 50% of that back.
Yeah, I would try to give it maybe another week.
No
If
problem.
you can see 40% or more, I'd
Mm-hmm.
probably try to take that.
No problem. Thank you.
You're welcome. Okay. Who else has questions? No one?
I have a question.
Okay.
So I know you don't. I know you don't do options that often, like scalping, but the stock trading in general How do you keep your emotions out of trading?
How do I keep my emotions out of trading? I set specific percentage targets and I take them. I don't question it. I don't be like, hey, I think it's going to keep going. Um, I'll be honest. We're all guilty of that, right? I mean, I did it with Clorox, although I took two off the table, left one, so technically I didn't, but I did. Um, Percentage profit targets, right? Number one. Number two, set limit exit orders. Don't even bother looking at it. Just set the order, walk away, and if it does pump to that, it's gonna get you out. You don't even have to do it. So setting limit orders is gonna do the work for you. I call it automation. It's gonna automate your trading. The more you can automate your trading, the better you'll be at avoiding emotion. Another thing is the types of strategies. You know, scalping, buying options, swinging weekly. That's emotional. That's as emotional as it gets. Maybe do yourself a favor and find a different strategy to avoid that kind of um, unneeded stress, right? So here's the way I look at scalping daily options and buying options and doing that kind of thing. When I've got $1 million and I can throw 10 grand at something and be like, whatever, then I'll start doing options like that. Until I have massive amounts of cash to throw at something like CLX that I did, if I could have bought 10 contracts of CLX, man, oh man, that would have been bank, right? But I'm not interested in buying options until my cash secured puts and my consistent strategies are netting me 10, 20, $30,000 a month or 50,000 every 2 months, something like that. When I'm netting profit like that, I'm okay with throwing 5 to 10 grand at something and losing all of it and being like, whatever. I'm gonna make it back in a week on my CSPs. Whatever. That's how I look at it. So, I mean, I highly recommend against everyone buying options until you're seasoned, until you have learned a lot, until you're experienced. I mean, Tilio is about the only person that I know that can successfully and skillfully scalp on a daily basis and come out as 80 to 90% wins, if not 100. Seen that happen daily. Um, Thing is, he's very seasoned, skilled, he knows exactly what he's doing. He's got hedge protection. I mean, he's covering all his bases. Everybody else that follows our analysts, they're not doing that. I guarantee it. They're not. And it's not because they're dumb or whatever. It's just they're not. They don't have enough experience to understand that, to be in that position, or they haven't been in that position to feel it, to know what it's like. Um, I just think daily scalping is the hardest thing to do because it makes the most money, right? The one thing that makes the most money in stock options is going to be the most risky, right? And the one thing that doesn't that make that much, it's going to be the most consistent. And guess which ones fall in those categories, right? I've discovered cash secured puts and covered calls. When I did, I realized, yeah, they don't pay. Like if I bought an option for $200 and then it ripped and I made 2 grand or 5 grand, like if I did Tesla at like you know 400 bucks and then and I bought a leap, cost me 15 grand or something, and then you know 2 months that $15,000 leap turned into 50,000. You know what I mean? Like that shit is risky as hell. I mean, if you're doing scalping, right, and you make so much money though, like there's just so much money you can make, but there's even more you can lose if you don't know what you're doing. I have yet to find anybody that can scalp like Tilio. I don't know anybody else can do it like him, consistently make money. I don't know anyone. You know, there's traders out there that they're fairly consistent. I'd say 65, 75% wins. Thing is, a lot of times you'll get into positions where you win 75% of the time, but those 25% of the losers crush all the winners you had. Like I don't like those odds. That's not something I'm really too interested in. That's bad odds for me. So I prefer something that's going to be like I'm guaranteed to not lose. Right? I used to say this a lot. The goal of the stock market is not how much money you can make; it's how much you can prevent yourself from losing. Right? That's the mindset mentality that I have, that I've had, especially when I discovered CSPs and covered calls, because those I don't lose. There's no losing, right? Unless you just pick the wrong stuff, and you know that's how you lose, right? But if you're seasoned, you understand what you're doing, confident in yourself, and you've been watching some of these tickers like white on rice, I guess. You're intimate with it. You understand everything. You dream about it. You're at work thinking about it. That's when you potentially have found what you're looking for, right? But hey, if you find yourself stressed out, man, it's just not the best place to be in, right? I mean, the type of stress at losing money is bad, right? That's the kind of thing make people bleed out of their buttholes, you know. So you don't want to put yourself in that position, and I'm not comfortable losing. Like I got family to feed, it's just me working. I can't lose. It's not in my MO. So maybe reconsider scalping. I think it's very dangerous. Unless you got $1 million and you can throw away $5 grand like nothing. Imagine some of those bi-weekly Tesla options. What are they like? Let's see how much they cost. Oh man, the price is so delicious too on Tesla. Come back under 600, please. Bi-weekly options, $4 grand. Jeez. My God, Tesla's just crazy. I kind of went on a rant there, Josh. Hopefully that answered your question, though.
Yeah, you did. Honestly, I'd need another account just for options, like a small one, just to learn about it and to see like how the market fluctuates. Um, but I'm mostly shares. I'm mostly following Mario share challenge, but I was just curious, what your outlook on it was
I got you.
from a emotions perspective. Not because I'm not really worried about blowing my account because I'm not putting that much out there to lose. I'm just trying to learn, and like I'm writing down every time I'm wrong or every time I lose, and I'm like saying, oh well, I sold too early because I panicked here. So next time I should just hold. You know what I mean? Like just trying to learn from all of my mistakes.
Definitely learning from mistakes is a major requirement. If you don't learn from mistakes, you will repeat them. But going back to emotion, I think it has a lot to do with strategy. You don't have a strategy, or strategy is a bad strategy. And not saying what I mean by that is trying to scalp something without the massive amounts of experience required. That's bad strategy, right? Um, pick a strategy that allows your emotions to be in check. I think that's the best way to say it. That's why I do CSPs and cover calls. I have no emotion whatsoever. Everybody's crying and screaming about red days. I'm like, shit, where am I buying? Where am I getting in a new position? Now, where's my next CSP going to be at? Because everybody else is worried about their options that they bought, calls on it. It's all getting crushed. I'm looking at my CSPs that I'm in. Yeah, they're getting crushed, but I don't lose. I take shares. Emotion's completely gone out of that. Only time I get emotional when I'm trading is when all my positions are showing 50 to 75% in profit. And I'm like, whoa, it's time to exit. That's when I get emotional. When I take profits. It's the kind of emotion you want, though, right? Okay, Randall has a question. Let's see. So, Randall, the wheel strategy, there is no foolproof way to always end up profitable, right? But the wheel strategy is about as close as you can get to it, other than shares, right? Shares you can almost always come out on top, unless you bought at a high. Unless you bought Tesla at 900, you know, that's bad. But CSPs and CCs, they're ways to mitigate loss, and you can manage these positions to where you can push them out until they do go into and until they go in the direction you need them to go. Right? I mean, there's a tricky time as to which or as to when you do something like that. It's all about timing. It's about understanding when you should and shouldn't do these types of strategies, or when you should or shouldn't get in and out. Is very important, but that takes experience to understand. And that takes coming to these lectures, especially mine and Faye's, um, because we're the option sellers here, and constantly asking questions, constantly learning things, constantly coming in and seeing things, and just kind of repeating, even if it's repetitive, over and over. It's like it's ingraining itself into your brain. So I would personally really if you feel like that seems like almost a foolproof strategy, then deeply educate yourself on both types of option plays, which is CSP and CC, and then educate yourself on how they connect with each other, right? And what goes into why you would choose something to do a CSP, right? Why would you do that? I made a video on that, so feel free to check it out. I think it's very beneficial. Both FaZe and I made that video, so it's a joint effort. Hopefully that answers your question, Randall. Michael, go for it.
Also, like, how do you get tax on the premium you be collecting every month though? How do the tax work? Like, if
At
I
the
make
end of the year, 1099. Whatever profit you
uh,
make, they tax. That's it.
so like 20% or 25?
Whatever income bracket you're in.
Okay, I got it. Damn. So those premiums not for free, right?
They are in my Roth account.
I gotta learn more about that.
I got a video on that too.
Oh shit! All right, no problem.
So check out that playlist I got.
All right, cool.
I also got a spreadsheet on growing your account over the course of 30 years, and you can edit it to your liking, and it'll help you see how your money can compound. And it's specific to a Roth IRA because taxation is tricky, and if I try to do it in a margin, there's just no telling how much the taxation is going to be because my job and everything kind of goes into the trading, so it's mixed with the trading income, so it'd be hard to determine. But when there's no tax, no penalties, none of that crap, and you can just look at it and say, oh, okay, within 5 years I'll have this much if I make 30% a year. In 10 years and 15, et cetera, et cetera. You can change the 30% to 60 to 100, whatever you want.
Oh, I got it. And then
That's
what?
on my
What?
sorry, one
Mhm.
other thing. That's on my my channel in the education section. Professor
All right.
Hostel.
I'm
That
sorry.
spreadsheet is there.
All right. Thank you. No problem. Thank you.
You're welcome.
And why don't you just like, because if trading have a lot of money like that, why don't you just like, do it 24/7? It's because I think like I think who else? I think Mario, I think you guys are in college or school or like, have jobs and all that. And I was thinking like if I'm making a lot of money trading, I wouldn't like get a job.
Well, yeah, absolutely. I mean, the goal is to not have a job, right? I mean, but you got to fund your portfolios,
Yeah, I got
right?
you. I get what you're saying.
But I mean, look, my Roth accounts, my goal is $1 million in 5 years. I'm at 100,000 right now, and it hasn't been a year yet. If I can,
Oh shit.
if I can 100% my account every single year in the next 5 years, I'll have over $1 million. Last
Yeah.
year I made 105%, so I know I can do it,
Mm-hmm.
right? So when you get to that point, so you might have heard me say this if you've been to any of my other lectures. I'm sure there's folks here that have probably heard it if they have been to my other lectures, and I actually probably heard it. But at $1 million in a Roth account, if I've contributed for 5 years, max amount, that's $30,000 that I've contributed, right? So if
Mm-hmm.
I got $1 million in my account, I'll have 970,000 when I pull that out. Tax free, no penalty because it's contributions, because it's allowed. Right. Now, when I take that 30 grand, I'm going to throw that into my margin account. That's the one that I want to grow. After my Roth accounts hit $1 million, then I'm going to take the contributions, throw it in my margin, grow that to where I'm making $200,000 or $300,000 a year with my job and that. Basically, I want to double my trading income, or rather, I want to double my regular day job income with my trading income. I want to double it, and then I can quit my job. Right. So let's just say, for example, I make 5 grand a month, just to make the math easy. Okay.
Mm-hmm.
And my margin account's making 10 grand a month. Well, I've got the choice to quit my job.
Yeah, you do.
Right. It's a choice. Now,
Mm-hmm.
my job is pretty freaking kosher. I'm not gonna lie. I sit here on a computer. I mean, I manage, I'm in IT, so I manage storage arrays. I'm in that. I'm in an operational support team, and I work second shift. I work Sunday to Wednesday, 10 hours a day, and each day I'm not even allowed to do work until 6 p.m. because we have this thing. It's called change control, where there's certain types of tickets that I can't do until after the business hours, right? Because they'll affect the production environment, right? So from 1:30 to 6 p.m., I'm not really doing anything, right? I mean, I'm reading emails, maybe going to conferences and meetings and phone calls. Um, that's it. I don't do tickets for 5, 6 hours,
Mm-hmm.
or 4.5 hours. But after 6 p.m., I get my tickets. I'll knock them out within an hour, hour and a half, and I'm off the rest of the day. So
Now I see why you get a job. I see.
I probably won't quit my job,
Yeah,
even if
you
I'm
don't have
making
to.
10 grand a month.
You don't have to.
Right? I'm chilling hard.
Yeah,
I
you
mean,
chill out. Yeah.
don't get me wrong. There are times when I'm busy from the moment I get in to the moment I get
Mhm.
off.
Yeah,
But
there's time like that. Yeah.
I'd say at least half of, at least so out of every 4 days of every week that I go to work, or that I log into work, because I work from home too, and I was working from home before COVID, mind you. So 2 out of the 4 days that I work, I pretty much don't do shit. I mean, Sunday. So I work Sunday to Wednesday, like I said. Sundays they're really really light. Nobody's online. I might have a few tickets. I'm chilling. Mondays, we have this thing called change freeze, where no tickets are allowed to be done on Mondays because of a particular part of the business that needs to stay. What's the word I'm looking for? No changes, so nothing goes down, right? And so Monday is basically a free day. I don't do anything. So it's just Tuesday and Wednesday that I'm doing work.
Yeah, makes sense. Makes sense.
So
Alright, but also like what age like did you start like get into options like I mean stocks like that? What age did you start, and how long it takes you like to
12
like to
years
get
ago.
there?
I'm 38.
Oh shit! Oh shit! Damn. So like, how long it takes you from the time you start to like you really have a get the hang of it? Like a year or two?
Hell no.
Oh man.
2015. That's when I started making money.
Like 4 years later or like 5 years later, like
I
right?
started in 2008.
2008. Oh, that's like 7 years after.
Yeah.
Damn.
Well,
Look,
we have so
here's the
much
thing.
more information at our fingertips now.
Yeah, I mean, what took me 7 years to learn, I can teach you guys in 30 minutes. Right? It was just a matter of finding it and
Mhm.
it being in front of me. Like we didn't really have YouTube back then. We definitely didn't have Discord. You know, all there were
No.
articles and a couple of apps here and there that had some kind of stock
Mhm.
news. It's basically like a bunch of BS, right? You had to go
Mhm.
out there and find it and learn it. And I mean, the thing that really takes the most time with stocks in general is just understanding concepts, understanding how to get in and out, understanding things that you need to know, right?
Mhm.
Greeks, IV, bid-ask spread, open interest, all those things. That's stuff you got to learn over time, right?
Mhm.
I could teach it all to you in this whole entire session, but how much of that are you going to continue to retain? That's the question,
Yeah.
right?
Yeah, that's true.
So the retainment is the real problem. Once you hear it 3, 4, 5 times and you start practicing it, then it's like, okay, yeah, whatever, I know that. All right, so
Yeah, right.
I mean, I'll be honest. 2008, I had 10 grand. I think it was actually when I started actually investing though, was like early 2009. I can't remember. It was right when the downturn finally hit its bottom and started coming back up. And it had been like a month after. So I'm like, well, damn, I looked at all the stocks that I was looking at, interested in, and I'm like, you know, everything's got to go back up, right?
Yeah,
I
yeah.
could buy whatever I want and it's going to go up.
Mhm.
So, I mean, I did. I 10 different stocks, $1,000 a piece over that course of, let's see, how many years was it? 2012. In 4 years, I turned 10 grand into 30,000. And that was with dividends.
Damn.
That was just holding shares and dividends the
Mhm.
whole time. I didn't do anything
Oh
else.
shit.
I made
Oh.
30 grand. Well, 20,000 on top of the 10. And then I took that money out and I put it down on my first house.
Oh
Right.
shit.
And then after that, I'm like, all right, I got $1,000. What can I do? So I actually started, I had this friend that I played games with. And he works at a hedge fund, but he's not like he's kind of like the low guy. But
Mhm.
he's like, look, man, we do options. I'm like, what are options? Right. And so started doing options. And I think it was 2012, 2013, something like that. It was right after I bought my house. It's probably about 6 months, 4 to 6 months. And I bought my first set of options, right? I bought 4 contracts at Apple, paid $1,000 total, made $7,500 off that in 2 weeks.
Oh shit.
Or actually, no, I got it on a Thursday. Their iPhones released Friday evening after the market. They blew sales out of the water by Monday. My $250 contracts, all 4 of them, equaled to 7,500. I'm sorry, 8,500 because the $1,000 was on top of the 75. And then
Yeah.
after that, I thought I was a pimp. I'm like, oh shit, this is easy. and then I lost my ass.
Oh man.
I lost all 8,500. I lost another 6,000, and then another 6,000. So
Uh-huh.
be happy
Yeah.
that
Yeah.
it took me all that time to learn, so I can teach you guys
Yeah,
to not
appreciate
do
it.
that.
Yeah, appreciate it. Because one thing that really get a lot of people into stocks is the money, you know?
Well, of course. I mean,
It's
that whole drive of, man, look how
yeah,
much money, look how much money this guy just made. Look how
yeah,
much money I just made off $1,000, $7,500.
yeah.
Man, that shit is unreal.
Yeah,
And
facts.
but it's not realistic, right? That was
Yeah.
out of so in 2012 I did that, and then for the next 3 years I lost every single option play I got into, and I didn't go in heavy on everything, right? So
Dang.
let's see, I had 8,500, so I had $20,000 total that I lost, right? And probably closer to 21, but so the first massive loss that I had was silver mini futures, and I was bullish. Well, I got in. It cost me $2,500 for a mini future contract, just one, and started going against me. Went down 50%, and I had a margin call. Another $2,500. They're like, here, hey, you need to get this account back up. I need you to put in 2,500 bucks more. So I'm like, shit. All right, so I'm 5 grand deep now. Shit kept going down. There's another $2,500 margin call. Did that. I'm like, fuck, man. And mind you, I'm at the beach. It's a
Yeah.
Saturday. I'm a fucking terrible vacation. Terrible. Because I just lost $7,500. Right? Because at
That's
that point they hit
crazy.
me with another margin call. I'm like, screw that, man. I'm already down $7,500. I am not doing any more. F this.
Yeah,
So I
that's
was down
crazy.
massively. And then after that, I started doing little stuff like $100 calls, $150, $50, $75, stuff like that over
Yeah,
the
yeah.
course of the next 2 to 3 years. And every single play I lost. So I didn't know what I was doing. I didn't know what charting was. I didn't know what technical. What's technical analysis? Who does that? Not this guy, right? So it took a lot of learning and a lot of loss.
Yeah.
And I
Yeah.
finally realized, you know what? Options ain't for me. I'm stopping options. I'm just not gonna do it. And then I started doing shares. I'm like, there's got to be a way to make money doing this. Like, there's got to be a way to
Yeah.
read these charts and you know be successful. So I started, and YouTube, mind you, by now it's pretty popular. In
Yeah.
2015, there's some videos out there. So I started watching videos and um, realized what charting was. Realized that a lot of people that are swinging shares, and like I didn't know what is swinging shares. Right? I didn't know what that was. And this is the whole part about the growth that I'm talking about is, what took me years to learn can take you guys literally months, right? And 2015, I learned how to chart. I learned support resistance. I learned what trend is. I learned how to identify trend in some way, like lower highs, lower lows, higher highs, higher lows, that kind of thing. And then I started finding success, right? And I started out with $700 in my Roth account, just mine. And I started making money. I'm like, damn. It was like a month, every 2 months, I would get in and out of a position, and I'd make 30, 35 to 65% return on every single one. But again, it took a month, 2, 3 months to do that, right? And the thing is, after I started figuring out that the charting is massively important, it dawned on me that I'm like, this is how we do it. And I was already in a Roth account, and I'm like, I can make all this money for our retirement because I mean, honestly, like I don't want to pull it out. I don't need to pull it out. I can live comfortably the way I am with my job. It pays me pretty good. So I'm not driving $100,000 cars, but
Mm-hmm.
and my house isn't $500,000 either. But at the same time, I'm pretty comfortable for an average person, right? And then I realized, all right, I'm gonna put. So at the time that I was doing this Roth, I was flipping stuff. I had made about $2,500 total from 700, right? And I was like, well, I'm gonna open up an account for my wife now because I am successful. I'm confident in what I'm doing. I know what to do. I know how to make money with shares. I'm gonna put $2,500 in my wife's Roth account, right? So then I had two accounts to do it with. Turn both of those accounts total together into 34 grand without putting any more money in the next 5 years or so. By
Damn.
January of 2020, I had $34,000 between those two accounts, right?
Mm.
And now, mind you, though, the previous year I did credit spreads. I did iron butterfly. Well, actually, for 3 years. So I started out. I think it was 2017, January. So it's always January for some reason. 2017 in January, I learned how to sell options, and I learned iron condors, iron butterflies, credit spreads, um, calendars, diagonals. Those are the five key ones that I learned. I mean, I know how to do straddles and strangles too. I learned that, but that's more risky. Stay away from that. But um, I did for the first. So in 2017, when I started doing option selling, by June, I was confident enough in myself to start trying to do it in a virtual trading account, right, in TOS. So I started doing that, trying to understand how to get in and out of positions, what is IV, all this shit.
Mm-hmm.
Learned it, got successful. I mean, um, credit spreads became my favorite thing. By 2019, sometime in 2019, I traded credit spreads for an entire year in a virtual account, right? By I think it was about well, not the entire year in virtual. I think it was like October I started playing with real money, and I did $500. Um, I got up to like 2 grand on credit spreads alone, but it took me like 3 4 months. I'm like, this is just too slow, right? It's too
Yeah.
slow.
Yeah.
So then I was like, it's got to be something else out there. And then I found credit spread. I'm saying, sorry, I found CSPs and covered calls. But
Mm.
I didn't know they connected with one another like a wheel strategy. I just knew they were two separate things. One
Mm-hmm.
did one and one did the other. And I'm like, let's try that. Right. So 2019, the whole entire year of 2019, I was doing credit spreads, covered calls, cash security puts, and shares. Right. And I got my account by January of 2020. My accounts were $34,000 total out of all that. Learning everything, learning selling options, learning all those strategies. Iron
Mm-hmm.
condors will burn your ass. Iron butterflies will burn your ass. And so will credit spreads. And I learned that
Mm-hmm.
hard way. I thought I was like, again, I got that confidence boost. And I'm like, yeah, I'm a pimp. I know what's up. I know how to do this, whatever. And I got burned pretty hard. I lost 2 grand on Tesla. Right? I did an
Mm.
iron condor on Tesla. It would have paid me 560 or something like that. Yeah, that's when it pumped up to 900, and I had my my ends of my iron condor. You know what iron condor is?
No, big.
Okay,
I
no,
started
you don't.
doing.
No,
Yeah. I
I'm just
just
gonna
don't.
say you
Yeah.
don't. If you
Yeah.
say that, okay. Do you know what a credit spread is?
I know what a credit spread is.
Okay, so an iron condor is two credit spreads on both ends, bottom and top,
Oh.
and the stock price is generally in the middle. And so what I was trying to do is be neutral and trade the range of Tesla. So I did credit spreads on both ends, put credit spread and call credit spread.
Mm-hmm.
Well, it went so far in the money past my call credit spread that put credit spread was basically nothing, right? I mean,
Oh shit.
it was maxed out in value, but
Yeah.
because I went so far in the money that value was just completely wiped out. So
Oh shit.
my top end was $400 or 400 strike, and that shit went to 900. So
Oh.
that was one big learning experience for me as far as iron condors, and I never touched iron condors after that because I
Mm.
realized they say, oh, it's a neutral trade, you know, you gotta beta weight your portfolio. Man, f that. Seriously, that's trash. I
Yeah.
mean, if you're buying options, then okay, you should probably consider beta weighting with hedging, right? But
Mm-hmm.
if you're selling, you don't really need to beta weight. I mean, the way I was taught is beta weighting is you want to try to keep your entire portfolio as neutral as possible, right? So you
Yeah.
be bearish, you be bullish, and if you've
Mm-hmm.
got 10 bears, you need 10 bulls, that kind of
Mm-hmm.
thing.
Mm-hmm.
Well, that didn't work out for me. So, like I said, I learned CSPs, I learned covered calls. That's what did it for me. Um, Started trading those, making pretty decent money. I was doing small stuff, $100, 150. That's kind of the quick profit that I was getting off of shares. So I'm like, well, let me just mimic the profit here and be safe so I can understand, learn, right? And
Yeah.
after I did that, you know, again, April of last year, my accounts, and mind you, I lost money in the COVID downturn. Right? I had some credit
Mm.
spreads I lost, so I was actually
Mm-hmm.
up more than that. I was probably about 38,000. So I lost 3,000 during COVID
Oh shit.
because I didn't have any shares. It was just all credit spreads. I was doing
Yeah.
nothing but credit spreads at the time.
Mm-hmm.
At that moment, like I said, I was doing CSPs, I was doing CCs. I really didn't do CCs very much at all. I had some random CSPs in there because for them they were like, I gotta just let it, wait it out. The credit spreads, I'd say, I get 15-20% return, I'm getting out. All right, and I was pretty successful with that, but still not what I'm looking for.
Yeah.
But after I learned CSPs the way I have and the wheel strategy specifically,
Mm-hmm.
that changed my mindset.
All right. Cool.
And that is what got my account from 34,000 to 105.
All right.
Minus I got 16,000 from my IRA. So minus that.
I see. All right. So because like the one thing that drove me was like the money. I see it could be rich, but like being rich to me thinking about you could be rich of the stock market was never about like being lucky. In my mind is always like you could be rich based on what you know, the knowledge you know. So I'm focused on like learning everything I can, everything, because like I look up to you and the other guys, but like I look up to you more in phase because you guys sell option, and that's why I really like wanna like focus on my main thing.
Right. Yeah,
So
yeah, definitely
yeah.
definitely focus on that, man. I mean, look, CSPs and cover calls is what's going to make me a millionaire. Not shares, not regular options. I'm telling you right now.
Damn.
1,000%. I'm guaranteed that's what's gonna make me a millionaire.
Mm-hmm.
I'm gonna be doing 30 contracts of PLTR, Fastly, all these ones that I like, the ones that are in
Mm-hmm.
my list: QS, T triple Q, TNA, DBX, Fastly, Laser, Lee, Neo, all that shit.
Mm-hmm.
30 contracts a piece. That's gonna be at least 5 grand each one. And if I'm in
Yeah,
6 or 7 of them,
mm-hmm.
that's
Yeah,
20,
that's
$30,000 right there.
yeah, because yeah. And like what do you mean by trading shares? What do you mean by trading shares? You mean like
Just swinging them, buying and
oh
selling.
I see. All right. Like you buy because that's how I started too, but I didn't know he was trading shares. I was like, if I can buy at 0.10 cents and sell it at 0.20 cents, and if I could buy 1,000 to 1,000 times 10 cents profit, I was like, that's a lot of money. But I didn't know like that's how you call it.
Yeah,
But
just trading shares, swinging them.
yeah.
I mean, when people say swing, There's some mistaking that for a week. When I say swing, I'm talking about a month.
A month. Okay.
Yeah.
All right. Thank you. I just want to like you probably don't know like how like what that means, but like that means a lot to mostly me because I look up to you and everything. I just want to thank you for everything and for the knowledge and everything. I just like thank you so much.
You're very welcome.
All right.
Okay. Anybody else? Looks like the
I have a question again.
okay.
So I'm a person that learns by making mistakes, or not making mistakes, but like experimenting with it, you know? And I know that's not the best way to learn how to do credit spreads, but do you have any like cheap stocks that you'd suggest me trying out just to get a feel for it?
You talking about like different tickers to try out? Is that what you said?
Yeah, different tickers for me to try out just to get the hang and get a better understanding of credit spreads, because I kind of understand it, but I learn better by actually doing it and watching it happen, but I don't want to risk my whole account.
Well, the beauty of credit spreads is they typically require small amounts of collateral, so you won't risk your entire account unless you're playing with $100 or 500. Then yeah, you're probably not going to make too much. Credit spreads, though, however, I recommend against. Wouldn't do credit spreads. There's a level of risk there that I'm not willing to get into, nor am I willing to suggest anyone to do it as well. If I won't do it, I will tell you not to as well, right? I think that credit spreads are a good way to burn your account, right? So here's an example. If you do 10 credit spreads and you make 20, 30, 40, $50 each, let's say you make $50 each, that's $500, right? But then you've got one play like Netflix requires $500 collateral. Well, it goes completely against you, like massively. Not only does it go in the money and most likely going to take every $500 of collateral, it's going to build on top of that. And it's going to take more than your collateral because it is a margin play. And with any margin play, it can go in the money and continue going in the money. Or I'm sorry, in the money with credit spreads. And it can continue to burn you, right? And they say, oh, credit spreads have a max loss. No, they don't. They have a collateralized amount. And let's use $500. If it goes against me so much where that whole entire $500 is gone, it starts eating away at my account, right? I'll be negative. Like my position will be so negative that it's going to eat at my account by expiration, right? So one example, I was in a SPY credit spread. I had I think it was a 290. It was a 290 call credit spread, which means I'm bearish. Well, it went to 330, and my collateral was $100 at the time. Well, at $330, my collateral, the amount that they wanted me to pay out, had I exited that position at 330, would have been like $1,500. Right? Had it stayed at 330 at expiration, it would have been something around there, 1,000, 1,200. It would have burned me pretty hard. Right? That's why I recommend people not touch credit spreads, because if it goes really against you, it's going to burn you so much that if you were 100% successful in all other trades prior, that one trade's going to wipe everything out. Because successful trades, they're small dollars. 15, 20% on a play, let's say $100 in premium for a credit spread, 15 to 20% in premium, that's $15 or $20. That's it. And if you get into one position that burns you, it takes just $500 from you. How many plays do you got to get that pay $20 to get back to that $500 amount? A ton. And what's to say that one of those doesn't go against you, right? That's why I like CSPs, because if it goes against me, okay, I'll take shares. Now I'll sell covered calls on it. If it goes against me, it'll take my shares, but I win no matter what. But I'll be honest. When I became an analyst here back in April, I was just doing straight credit spreads. I did 60 credit spreads over the course of 2 months. I started my account at $500, and I got to 2,500 in 2 months with 60 plays, and only made $2,000. This month, I've done 10 plays and made $2,000 off of CSPs. Now, mind you, those 60 plays, 57 I got right. Now, out of that 57, I'd say a good 30% I had to hold all the way until expiration and got lucky. Right? And out of the 3 that I lost, they weren't massive losses. They were like $50, 75, 60, something like that. So they weren't massive losses, but it probably negated 10 plays that I got 20 to $25 or $15 out of. Right? There were plays that I exited for $5 or $10 and then turn around and lose this one for 50. Right? So it's just the cost and benefit versus the risk, or let me rephrase it. The risk to reward, it just doesn't weigh up. It doesn't weigh out. It doesn't fit, right? But if you're doing CSPs and covered calls and the wheel strategy, now your odds and probabilities exponentially increase in your favor because you choose when to lose, right? I can roll CSPs and covered calls all day long as long as the premium and credit and everything's there and expiration and all that. I can roll out for eternity. Credit spreads, you roll, your collateral grows. Not something I'm interested in. And the premium is smaller. So if I got like a $50 premium on something, collateral was $100, I had to roll that position, that credit spread. That 100 turns into 250, and my premium I only got about $25. So now my collateral is 750, and my maximum premium is 75. That's trash. So there's no real way to manage that position, right? There's no real way to manage a credit spread because it's just going to hurt you. I mean, you can manage it, right? I mean, you've got a long and short leg, and you can move that either of those legs in the direction that you need to. But again, you're not going to, if you're losing straight up, moving that leg is not going to do squat. Do you have another question?
Yeah, so I want to apologize because I was actually multitasking. I meant to ask about covered calls and the real strategy. I was wondering what stocks I could use or play with to get a better understanding of how to use those tools in my trading.
Sorry, which tools?
Covered call, like your strategy of using covered calls or
CSPs.
the real strategy. Yeah.
Yeah. Okay. And
I was wondering what tickers you would suggest me like starting off with, just to get a feel for what happens, because that is how I learn best, is by trying it out and seeing what happens and getting a better understanding that way. Because
okay.
I can watch it I can study it and I can be like, okay, I have to buy a put and calls in different places, or I have to buy 100 shares of this and sell it. I can research it, but I won't actually be able to understand it until I put my foot in the door and say, oh, this is what happens when I do this. You know what I'm saying?
Yeah, I understand. Everybody learns differently. I'm kind of the same way. I need to do it to really grasp. Um, I would say start with something cheap, right? Start with laser, PLTR. Those are two really good ones that I think would be a great starting point. I mean, they're cheap. 2,500. It's really not much in the grand scheme of things. You could sell a 25p on laser. Let's see. Let me take a look here. Excuse me. So I could sell a. Oh, that's Tesla. Laser. I could sell a 25p right now for $215 for one contract. That is almost 10% of leveraged return on leveraged cash. So 2,500. Oops. 215 divided by 2,500. That's 8.6% return off of $2,500. Right, so that's pretty decent. I would say 5% or more. I like 8 to 12. Anything higher than that's fantastic, but dangerous. So start with one of those two. I think PLTR is not paying as well. Maybe. Let me see. Well, honestly, with PLTR, you could do the 25p on the April 16th expiration. Go in the money on the put side. Sell the 25p, you'll get 288. It's in the money, but I guarantee you it won't be in the money by April 16th. Almost certain of that. So try that one. Try either one of those. I think that'd be a good starting point.
All right, I'll check it out. Thank you.
You're welcome. Okay. Anybody else? The Zoom is shrinking. I wonder if YouTube's still alive. Ah, yes.
I don't think there's many of us left.
G-Sand. Potential inverse head and shoulders on Clorox? I don't know. Maybe. Let's see. Nah. Don't see it. But I do believe that it's going to start ripping soon here. I mean, it had a major drop today and then bounced 50% from its drop. So from 188 to 181, that's a and then it jumped, and that jump is a 50% jump. Looks like close to it, maybe 40, 50%, something like that. So we might see Clorox break out. I don't know. I mean, it's been testing that resistance level quite a few times. I don't know. I might wait that one out a little bit. Just not sure. I mean, like I said, I'm a strong believer in Clorox. Had I got it at 180 or 181 today, yeah, I'd be happy. Because in tomorrow, I guarantee you I'd get out with profit. All right. Michael, go for it.
If you don't mind me asking, like, can you give me a little, like, tell me about like this channel, no, the Discord, like the analyst, you and the other guys, like who gotta like run the stuff, like stuff like that.
What do you mean run the stuff? Like run the
Like,
server?
yeah, the server basically, yeah.
Like who's in charge and that kind of thing?
Yeah, who's in charge and like, yeah.
Okay. Tilio's the top dog. I'm
Yeah.
second in command.
Mm-hmm.
We had MMA, but he got off of Discord and he's just kind of like in the back end, so he's not really here. Otherwise,
Mm-hmm.
he'd be. Him and Tilio own the server. I'm under them, and
Okay.
then there's no real structure after that. I mean, we have analysts, we have support members.
Yeah.
None of them are really higher than each other. They don't have privileges to make them um, higher than one another. We've got
Okay.
people that manage the trade floor, or really all of the floors. They keep an eye on it, and they're moderators, so we give them special privileges to mute people and warn people and that kind of thing. But
Okay. Okay.
the only real ones that can ban and kick is me and Tilio. No one
Okay.
else
I
really
got
does
it.
that.
And like, how do you pick the analysts? Like, do you like pick them based on like if you know them, or like do they have to be qualified?
They got to be qualified. We'd probably run them through a interview type thing and be like, chart this, chart that. What do you think about this? What do you think about that? I mean, I've got a list of questions for people that I interview, right?
Okay. Okay. I got it.
Yeah, I mean, it's like
Mm-hmm.
a real job. I mean, this is a real
Yeah.
business.
Yeah.
It's an
Yeah.
LLC. I get a 1099 for the money I get paid. So, I mean,
Mm-hmm.
it's legit business.
Yeah. 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 So like the Instagram page is like, do you run that too?
No, that's MMA. He's the one that runs the website. He's the one that does the marketing. He does the Instagram.
Okay, I got it.
Yeah, I think he does Twitter.
Mm-hmm.
But yeah,
And
Tilio's like I said, the top guy, also the top trader.
mm-hmm.
I wouldn't say that I'm the second best or whatever. I mean, I don't really look at it like that. I mean, everybody's good in my opinion.
Yeah,
FaZe is
everybody got their
great.
own
preferences
too, you know.
Yeah. I mean, it depends on the type of trading you
Yeah,
want.
you are. Yeah, right.
I mean, everybody's good at something. Everybody
Mm-hmm.
just doesn't know how to do something, right? So, I mean, I think it's a pretty well-rounded group here, and
Mm-hmm.
everybody can help each other in some form. Like somebody knows something.
Yeah, right, right. And what about you? Like, you don't be on social media like that, Instagram, Twitter, stuff like that.
No. I mean, I got YouTube. Like I said, I got my YouTube channel,
Yeah.
but I don't do I don't really like. I'm just not a fan of that stuff, man. To me, that's like I'm a little bit more traditional and old school.
Mm-hmm.
Like, I never signed up for Instagram. I never signed up for Twitter. I've got a Facebook reluctantly, and it like TikTok. I don't mess with that.
Mm-hmm.
I'm just a very private person, so I don't
Yeah.
like doing that kind of stuff. Social
I get
media
it.
shows everybody your life.
Yeah, I get it. That's true. That's really crazy because the people who really like know stuff, who got the knowledge and all that, like they don't really like on Instagram. And on Instagram, you saw a lot of people trying to sell you stuff like that's not, they
Oh
don't
yeah.
even. Yeah, that's
Well,
so crazy to me.
Instagram's for people that are trying to make money. They're trying to get up. They're trying to become
Mm-hmm.
someone, trying to become a star. Like that Travis Scott guy that he's always doing those TikToks. Isn't he the guy that does TikToks where he's like, what do you think about this person on this phone? And then they walk up behind them, kind of thing. I think
Yeah,
is how
yeah,
that goes. And he just got popular off of that, right? And
yeah, right.
that's cool and all. But if somebody's trying to sell something on Instagram, I mean, not everybody on there is selling snake oil, but there's a lot.
Mm-hmm.
And it's just a matter of, you know, sifting through, right? Did you find the server on Instagram?
The only option trade.
Yeah.
Yeah, right.
Okay.
That's where I found it, and then I always wanted to join, and when I joined, and then I see like it was diversified and all that, and then I kind of like it, I
Right.
love it though, yeah. but I was always curious about, who's Tilio, who's this guy, who's this guy, who's this guy, Phase, you, stuff like that.
Right, right.
Yeah. And like is there a way like people can meet you, sometimes?
uh, Potentially. So me and Tilio talked when we first started the server. So when we first started, MMA wasn't really around. It was just me and Tilio.
Mm-hmm.
And at the time, I was just an analyst. I wasn't really in the position I'm in now. I'm more of like a managerial position.
Mm-hmm.
And I wasn't teaching. I wasn't doing these classes. Me and Tilio talked about, when we're successful, when we've got a lot of members and, we're making a lot of money, we start giving back. We want to start having these only option getaways and, rent like a beach house that can have like, I don't know, 50 people or something, a massive beach house,
Mm-hmm.
and, get everybody that wants to come show up and that kind of thing, try and accommodate as many people as we could,
Mm-hmm.
have outings and that kind of thing, right?
Mm-hmm.
I don't think in the near future. Maybe. I mean, if you come to North Carolina, I'll meet you.
That's where you stay at?
Yeah, Raleigh, North Carolina.
No problem. So, is it like one day you're gonna have like a big, I don't know, like a day, like only option trade days, some stuff like that, so every members can come together, and like you would do like like a speech in person, or like, that would be fun too.
Yeah, I mean, yeah, like I said, we've thought about it. We've thought about doing things um, like running classes,
Yeah,
in-person classes. Like,
yeah,
have like 500 people come or something
yeah,
like
yeah,
that.
yeah.
I mean, that'd be a big payday. I'll be honest with you. I mean, we could charge $500 a person to do in-class training. I'm telling you, man, I see it all the time, dude.
Uh-huh.
I know people that do that. They charge $3,000
2000,
for
yeah,
2 hours, man.
for 2 hours, yeah, yeah,
I'm like, damn, I could do $500, and I teach more shit than that guy.
yeah, exactly.
What
Yeah.
the fuck?
What's that?
I don't know who said that.
No, that's just crazy.
Oh
Oh yeah,
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 yeah, yeah. That's crazy. That's crazy. Yeah, and
yeah.
and
We thought
people
about it.
are.
I mean, like me and FaZe have talked about meeting up. He lives in Charlotte. He's
Oh,
two and a
okay,
half
okay.
hours from me. Mario, he's in Cali. Belen, she's in Cali. We all talked about meeting up. I want to kind of start small. Meet up with people that I've talked to for since the start of the server, really.
Mm-hmm.
Mainly FaZe. So FaZe joined a month or two after I did,
Mm-hmm.
and um, we kind of do the same stuff, right? So
Yeah,
he
yeah.
was into CSPs. He was into that kind of thing. He really didn't. I
Mm-hmm.
mean, he knew about it. He
Mm-hmm.
was somewhat successful with it, but didn't understand the management of it. Didn't understand charting. Didn't understand technical analysis. And I taught him
Mm-hmm.
all that. And now he's crazy successful, like
Yeah, yeah.
more
That's
than
that's
me.
so. Yeah, that's what you call environment, right? Like the people who like you around with, you learn from them, they learn from you.
Right.
Yeah.
So I mean, like I said, I taught him. Um, then we brought him on in support because he's always helping
Mm-hmm.
people. And then I'm
Yeah.
like, well, um, let's get you doing because he wanted to be an analyst, and we had
Yeah.
him initially. He was just giving out random plays in the selling premium chat, but he wasn't an analyst. Now,
Mm-hmm.
you know what? You can do that. That's cool. We'll watch it and see how it goes. And like I said, every decision I make goes through Tilio, and I wouldn't say every decision he makes goes through me, but he does run a lot of stuff by me.
Mm-hmm.
And FaZe was doing well, so I'm like, well, let's bring him on, and
Mm,
still doing
yeah.
well. So
Yeah. And how old is the Discord?
April of last year.
April last year, right? Oh,
Yep.
and the next 5 years are gonna be big.
Oh man, if it keeps growing the way it's growing, holy smokes! I don't know how
Yeah.
many actual premium members we have. I just know how many people join the server,
Mm-hmm.
and there's a lot.
Mm. And then, and in the next 5 years, I'm probably gonna make my first, at least 500K.
Yeah, that's what's up. I'm trying to be a million, so I'm down. I'm gonna do it.
No, no problem. Thank you, sir.
You're
Appreciate it.
welcome.
Uh-huh.
Well, if anybody else has any questions, happy to answer them. I think we're probably winding down to the end. I'll wait another couple of minutes in case somebody wants to ask anything.
Hey, I got a question.
Okay.
Hey, I know it's probably going to be some you've heard probably a million times, but so a covered call, I mean, you have to own a certain amount of shares to use it for anything, correct?
100 shares specifically, but yes.
Oh, okay. I mean, I'm sorry, I was just getting a little confused because you can sell options, but I mean, you have the option. I mean, it's kind of like 100 shares as well. So that's why I kind of got confused with it. So just trying
Yeah,
to
I
check
mean,
that out.
every option contract is 100 shares, regardless of buying or selling. The only difference
Oh,
is when you're buying, you're going long. When you're selling, you're going short.
got it. Got it. Okay. Thank you.
You're welcome.
All right.
And shorting means borrowing. You don't actually own it.
Okay. Yeah, no, yeah, it's super confusing still. So you said shorting.
Basically borrowing. So if I short something at like a 30 strike, and basically I'm borrowing from the market saying, hey, I want to get 100 shares and I'm going to short these in the direction of up, right? So I'm not actually buying shares. I'm just going to borrow them at this price, and then I'm going to sell them later. I'm sorry, I'm going to buy them later for cheaper than I got paid for them. Right?
Okay. I see what you're saying. Okay.
So it's the
All
exact
right.
opposite of buying options. You buy options, you sell your contract, it makes money, right? It goes up, makes money, or vice versa. It goes down, you lose money. But you're long, so you can exercise that contract and own the 100 shares, right?
Right. Okay.
So
Okay.
it's all in one direction, right? You're long no matter what. But with CSP, I'm short until it assigns me shares, then makes me long.
Okay. I see what you're saying. Okay. Thank you.
You're welcome. Anyone else? Feet pics, Johnny?
Hey, you were talking about selling stuff on Instagram, right?
That's OnlyFans, bro.
Oh man, I'm outdated, I guess then.
I'm not really sure, to be honest with you. I just know OnlyFans is a little bit, it's like softcore. Softcore porn, I think, is what OnlyFans is.
Softcore, bro. OnlyFans apparently is like it's a full deal. Like, because a
Oh, is
lot of my
it?
friends, yeah, I think so. Because like a lot of my friends who I never would have expected, um, they just, yeah. I mean, people get fired for having a OF account and stuff like that. Like teachers and nurses and like employers, they'll find it, and it's one of those things where it's like super controversial, and it's like you can like gauge the level and how much you want to do, but it's anywhere from like you said, softcore, not safe for work kind of thing, to like I think it's like full blown. So it's weird. It's yeah. I mean, the CEO and the CFO recently was just like bragging about how it like blew up and they're making stupid money.
Oh, I bet.
It's just like this whole pandemic and everything online, and I mean it
Right.
is in essence an online business, and it's a side hustle or like main hustle for some people. And I mean, you guys wouldn't hire or fire people, analysts, for having an OnlyFans, right?
Nah.
Your business too.
Hell no, man. Just make sure your name on OnlyFans is not the same one you're using on Discord. Make sure you can't get tied back because, I mean, I'll be honest, it is a conflict of interest for the business if it's found out that you're a porn star on the side, right? So, I mean, I can't
Somebody's
say
got to
that I
pay for
would,
them, the CSPs and the covered calls, man.
right? I mean, I can't say that I would get rid of somebody because of it, but I would be like, look, you need to be incognito, right? You can't, if you're like a top analyst, like let's say I did it. Let's say I was on there doing porn, and then Tilly was like, bro, um, you can't use your name hostile takeover, okay? Like they're gonna know, like if somebody's on Discord and then they see your OnlyFans, they're gonna know it's you, right? So if you're gonna do it to where we can't figure out that it's you. That's what I would tell somebody. I don't want to be able to figure out that it's you. You feel free to do it. You're free to do it, but just don't let me figure it out, because then I'm probably gonna be like, look, we're gonna have to do something about it. I mean,
Just have that conversation. So great plays, by the way. Yeah, I mean, honestly, I feel like it's one of those things where it, like you said, business wise, it seems like it's common sense, and you don't want to mix the business versus like pleasure and all that stuff. But most of the OnlyFans people are like not bashing on any generation, but it's typically like the high school, or not high school, but like Gen
early
Z, like
college,
20,
late
yeah. And
college, yeah,
so they don't really have experience, and digital is like their world,
right.
which I get it. But I mean, like you said, it's something simple as not using the same username can make a big difference.
Right, or if you're like somebody that like on TV, like let's say you're a news anchor, and then you go on there, even if you're using a different name, somebody's gonna recognize her face or his face. Wear a mask.
Yeah, that's so
Wear
true.
a mask. Cover your face. Right. I'm not talking about a damn COVID mask. I'm talking about an actual mask.
Okay, now you're getting into some weird stuff, bro.
Just
Yeah,
saying,
I think
man.
there's a category for that too.
Probably falls under
No,
fetish or
it's like
something.
it's called like furries or something. And my friend was, I know it's like really off topic, but side tangent. It's just, yeah, it's apparently people dress up as like fur animals, foxes, horses, bears, whatever, and it's a thing. But I mean, it covers your face.
What are
Bestiality.
you watching, bro?
I'm starting to wonder if your friend actually exists.
So this
I think
friend,
you're just talking
wink,
about
wink.
yourself at this point.
Oh my gosh. But no, back to options. Thank you. I've been a fly tonight, but no, like it's crazy. Yeah, it's like I think it's like emotional, and like you mentioned something briefly about emotional, and I shared last time too. I think that's the part that I'm trying to, like, psychology part of it and the motion part of it, and just get to a level where like you and a lot of people are just like confident, where you don't even have to be like 100% sure, but at least confident enough to trust your strategy, trust your plan, trust your technique, and
Right. Absolutely.
doing that. And I think that's because like today it kind of shook, or not kind of, it really shook me. And I've been in some plays, and I made some money, not a lot, but in the last couple of days. And it's that whole part of like, oh dude, like what can happen in 2 days. So my things expire tomorrow, and I was like, you know what, one more day, whatever. And stupid PDT rule, I was like, damn, I'm just gonna hold it for another night. And I got burned today hard. And tomorrow I'm like kind of nervous. I'm scared. I'm just like, dang, like these plays are gonna like not do so hot. And but again, it's the whole like, I'm trying to like revisit why I entered it and where I entered it. And at the time, like there was a lot of fake outs and stuff, and I was hopeful, but then that news, not even news, something just happened, it dropped, and I'm like, no. But no, like, yeah, I like just listening to people's stories and sharing their techniques and strats and just like how to do it. But yeah, it's you seem like super chill dude, and I'm like, dude, like I don't know if it stems from lifestyle or what it is, like it's just I think that's what I need in the trading business, and not rushing in, just like being chill about it. And I don't know, like FOMO actually does play. That died down a lot, thankfully, because recently the thrash has been super crazy. I'm like, yeah, I'm not even going to do FOMO, but I think I still have to, I still got ways to go for the whole, figuring out the strat and
Well, what strategy
being,
are you using right now?
so I have, I don't want to say reverted, but I have graciously went back to shares. And I'm trying to do, build my account, my port, so that I can eventually do CSPs, and cover calls. But right now I'm doing shares, and then shares and leaps when possible. But yeah, I mean, like I said, I made some money, and I was like, oh, let me just throw this change in the market just to whatever. And so I had some debit spreads, which are hurting me right now, and Tesla is burning me. So I'm like, oh, Tesla burned me before, and I still gave it a chance, and it's burning me again. So it's like, I should have just saved the money. And yeah, speaking of which, like, what's your recommendation on sitting and not having to feel like you have to spend money? You know what I mean? Like, I don't know. I've gotten a little better, but it's one of those things where it's like, oh, instead of having my money idle, whatever, let me just throw it in a play to make a couple of bucks. And I think that's already a mistake. But how do you sit on your hands in markets like this? Like, do you just like close the computer? Do you just walk away? Do you still watch it? Like, or is it just patience or experience?
Probably a lot of that, but the strategy, CSPs, man, like
Oh yeah,
no matter what, I'm not gonna lose. I get assigned. Okay, here's the thing. If I get assigned, it's gonna be assignment at support, which means that that's near the bottom. So assign me. It's fine, because I will own the shares. And even if I don't sell covered calls, I'll just set a limit exit order for some number that's near the first resistance point, and walk away and never look back. And at some point, I'll get an alert saying that my shit sold.
That's
mean,
gold, man. That's so, I mean, that is like max chill. I think that's what I thought stocks would be like, where it's like you set it and you forget it kind of thing. But I learned real quick that it's not like that. It can, like, plays can turn, and they can like really burn you. And oh, that comment you said earlier, oh man, I really loved it, where you mentioned the whole we try to squeeze the max out of a play, but we end up getting squeezed by the market. You mentioned that earlier, right? Briefly.
Yep.
That is gold. Oh my goodness. That's what happened a couple of days ago. I was like, all right, I was already in profit. I was green. And I was like, oh, 2 more days of expiration. I'm just gonna keep even more. And nah, it squeezed me hard. And so
it didn't take long.
Yeah. So like 2 days, no, not even 2 days, in 1 day. And I kid you not, Wednesday, the Teslas were up, and I'm like, damn, this is good, Powell, yeah. And then today, boom, market was like, yep, you had your chance, but I'm gonna take it all back, and then some. And I'm like, oh man. So when
I'm
you
gonna
said
take
that
it all
comment,
back, and then I'm gonna shake you down for some more.
oh gosh, but yeah, I mean, that's why I love listening into this. And like, even if it's not trade related, I feel like that's like just like things you can apply in life too, just
Oh yeah,
like
absolutely,
you try to
man.
squeeze things, and that's why you got to be like happy and content and like thankful and like humble and stuff like that. But because literally in less than 24 hours things can turn. And yeah, I mean,
turn and burn.
Turn and burn. Exactly. So I mean, thank you. And I definitely learned about the credit spread too, because I know Josh was saying it too. Again, to add to what Hassel said, you already mentioned the whole, you can get burned past like your collateral.
Mm-hmm.
I was super close. And again, Tesla was the one that I had a credit put on. Mine was the other side.
It's on the downside.
And
On the
yeah,
bottom.
it just dropped. Whew, it went past that, and I was thankfully it like expired the next day, but so I didn't have to lose too much. But that was a learning experience too. It just, I thought like debit spreads, what you pay is, you know, the max loss. Nah, this is it's scary stuff, man. Be careful.
Well, no, the debit spread is. Credit spread is not. So debit, anytime you buy something, you pay a debit, that's all you're going to lose. Anytime you sell something for premium, actually everything that you sell for premium requires margin except for covered calls and cash secured puts. Everything else does, and everything else can burn you so badly that you're not even going to want to look at the chart anymore.
Yeah, I hear you on that one. And now I understand why some traders have like a blacklist. And
yeah,
I don't know. I mean, I just try to give people multiple chances, you know, just be generous. And whoo, yeah, it hurts you. So
yeah.
do you have any stocks, blacklisted stocks?
So I wouldn't call them blacklisted. I would just say delisted. And they're not
Oh,
on my
smart,
list
smart.
anymore. So I'm trying to think of some that I've removed. Plug was one of them. It's on the chopping block, but it seems to be holding out pretty well. Ride, it's probably going to get chopped because something's happening to it. I mean, it dropped from, you know, $20 near its inception price almost, and that's not a good sign. So might get rid of that one. I'm trying to think. What have I traded before that burned me? I mean, Tesla burns me, but I swear it's like keeps calling me back. Like, hey, this premium's looking pretty good.
I know.
This premium is looking really good. You should try and get some of that. Oh, gold, GOLD. I'm ready to cut that crap as soon as I damn get off this leap that I'm in with gold. Look at this crap. This crap. Hate this thing. And I got shares of this, by the way. And my shares, our break evens at like 23.50 or something, like up here. I had actually, so this is a stock that I own since 2011. I've owned GOLD for years, a decade now. I bought it back in the height of the precious metals time, right? 2011. It was gold was at its highs, silver was at its highs, and that's when I bought this. You know, didn't know shit. Bought it. I think I paid $65 a share for it, and I put in $3,000, and I averaged down. So when it hit like I think it was like 65, 70 almost, and then it dropped, and it just kept dropping. I mean, let's look. I'll show you actually. Look at this. Look at this crap.
Are you sharing the screen?
Oh, I'm sorry. That would help, wouldn't it?
I wasn't sure. I was like, oh, okay.
So
Wait, whoa.
So 55, and it fell all the way down here. All right, I didn't buy any here. I bought some. It's like 13 is where I averaged in, right? 13 something, 1380 I think is what I averaged in. So I initially started out with like $2,000, right, in this position. It says 56, but I swear it was over 60, 62 I think it was the number. And then I averaged in another 1,000, right? And I can't remember what my break even was. I don't remember what it was. And then I realized that I could sell calls or yeah, sell calls against it. So I evened out all of my shares. You know, so I got like, I think I have 800 shares maybe. Hold on, I have to do some math because I don't remember. You know what? I'll just log on to my damn thing. Why do math when I can just look, right? But I like, so I mentioned selling covered calls on it, but then you look at the premium on this thing, 30 days out, it's giving me 80 bucks, right? That's so garbage, and that's at the money.
Wow, risk of shares being taken away.
Yeah.
Not worth the premium.
Like I can't even go to the 24 strike and make shit. So I'm like, man, I I'm getting out of this, and when I'm out, I am out forever. Let's see, where is it at? I should count.
Well, at least your tax will be good on that one. You had it over a year, 365 or whatever.
Well,
You
it's
had
in
10
it's in an
years.
IRA, so it's not like I'm getting
Oh,
taxed anyways.
even better, yeah.
Let's see. My total cost in is $5,000. I've got 500 shares, so 5 covered calls is going to get me. I don't even want to do that. It's so trash.
Even gas money, man.
If even, I guess. I mean, but I got $5,000 in this thing. I've been in it for 10 years. I was able, so when it was, excuse me, when it was at, where was it? Last year, up here at 30 plus, $30. I was showing like a, it was like a $500-600 profit. And I'm like, yeah, hell yeah, this thing will keep going. Gold and silver's in a bull market. And then it just started tanking and tanking and tanking. My break even's at 23 something. Was it 23.83? That's the break even. So like I can't even sell calls on this thing. So this is a D-lister right here. This one. I'm trying to think if I have any more that I know off the top of my head. Let's see. There was something that I stopped trading. It was a $20 stock. I can't remember what it was.
Is it silver? SLV?
No, but I'm in that crap too. I don't know why I do it to myself. I mean, but that I haven't been holding for very long, and I'm up on it by like 50 bucks. You know that spike we had in SLV?
Yeah, the Wall Street Bets one.
Yep, I had a $400 profit on that, and I didn't take it. And matter of fact, had I remembered that I can sell shares in pre-market and after hours, um, you know that I probably could have gotten shit double that because well no not quite that much. So when the market opened it was at like 25 or 26 change I think. Let's see.
Yeah, it shot up pre-market, and that was similar for
Yeah.
yeah,
So
it
it
was a good
opened
one.
at 27.49 and I was at $400 in profit. I don't know why I didn't take that opportunity at pre-market and dump it at 20 because I would have. I definitely would have then. I know I would have got rid of it then. But now I'm sitting here after a month and a half, like, damn, I could have been out of that position, made $400, been in something else, making more money. But now I got capital tied up between just these two plays. That's $7,500 or 7,500 bucks in capital tied up. So as soon as they come into the profit, the at least gold. I know silver. I'm probably going to dump that one pretty soon too. Um, Gold's getting removed off the list completely. But there is one silver ticker symbol that I actually like. It's called PSILV, PSLV. And unlike SLV, which is all paper traded silver, PSLV is backed by real silver bullion. So whatever the market cap of P Silv is, and the price is like $9 or something. Let's see. I think there's a market cap or something for this where it tells you um, how much the trust is worth, and in that trust, based off of, so what they do is you buy shares. So let's say I buy $1,000 worth of shares. They'll take that $1,000 of shares or money and go buy precious metals with it and put it in a vault, and then that's what makes this P Silv really a solid ETF to invest in, because all they do, their only holding is actual physical silver. So this one's probably about the only one that I would trust. And I was actually down on this for years. I had this one as well. Bought this one around the same time as everything was crashing, and I got it at, I think it was $13. I'll tell you. Look on my account right now and see what my first entry price was.
Wait, the company holds like actual material, and then like when you sell the share, they just like sell the material back,
something
or
like
something.
that.
Like, what do you mean?
Yeah, so I mean, so they have.
Oh, I see.
It's
I
not
see.
one to
Instead of,
one.
got it.
It's kind of like you ever heard of that rule where banks have to have X amount of cash on hand?
For like crisis and stuff.
Yeah, it's similar to that. I don't know the percentage. What I do know is they will issue you actual silver if you are exiting a position, or let me rephrase. You have enough cash in the position to buy 10,000 ounces of silver, then they'll let you exercise it. But if it's under that number, they won't let you exercise the silver. So you gotta buy 10,000 ounces before they'll be like, okay, here, we'll give you actual real silver. Otherwise, if it's less than that, then they're gonna be like, nah, you can just take your money back or whatever you want to do, but you're not getting silver. So, it's kind of one of those things where, like I said, it's not one to one, but what they do is they take the cash and they go buy physical bullion, right? I don't know if it's, like I said $1,000 earlier. They take the $1,000. I'm not totally sure on that. There's a ratio, I'm sure, because the value of the stock has got to stay up based off the cash that's put in it, and then they go out and buy silver as well, bullion, right? So you can't have a stock with no money but have silver bullion. Like, you get what I'm saying? Like, it's just not, like, there has to be cash somewhere. There has to be money somewhere in addition to the bullion, because how are they going to pay back somebody that exits the position, right? So
Yeah.
they definitely need to have some sort of cash on hand, plus definitely bullion. I know 1,000% they definitely go out and buy bullion.
That's
They're
cool. It sounds kind of like a CSP. Like, I mean, vaguely from if I got this, it's like, you have this buying power, you have this collateral, etc., and then it's essentially if you get $100 worth, you can actually get assigned like the shares or the silver, or you can just pull out and keep the premium. It's like, but that in like real life, where it's like you pay up to a point where you can have like the actual silver, you buy enough, you pay enough to have the equivalent of actual silver, or you just pull out and keep just like the money, right?
Yep.
That's so cool. Yeah, no, I mean, yeah, the only reason why I kind of get it is because you guys been like, I've been attending your lectures, and so I was like, oh wait, that kind of sounds like, no, okay, that's cool though. Like, you can actually get silver or you get your money back. I mean, like what you put in. So I think it's like, either way, that's good, because I remember you saying something about SLV and how it's like super manipulated and stuff like that.
Yep.
And I was like, wow,
Yep.
I definitely saw it firsthand with Wall Street. Because I was like, that's silver.
If you look at the chart, right? Am I still sharing? Yeah, I'm still sharing. So look at the chart here on P Silv, right? See how it's kind of like just slow movements, right? It's just not very drastic, except for this obvious one. Let's just look at this right here. Look how slow moving it is, right? But it's a consistent upward movement, and then you got this downtrend, then it goes slow sideways again, right? All right, let's look at silver. Look at how much more movement there is. Look at the candles. They're more choppy, right? I'm gonna keep going back and forth so you can see this. P silv, silver. You see it?
Yeah, that's crazy. I mean, this one looks like stock. Like SLV looks like any other stock where it's like, oh, it has like zones and stuff, but
Right.
it's like up and down, up and down. Whereas the other one seems more like controlled and like, oh, okay, more natural, less like jittery.
Right. Yeah. Exactly. And that like I said, because they don't allow people to manipulate the stock, and they like a lot of ETFs out there. They've got different holdings, multiple holdings. Like NUG-T. NUG-T is a gold um what do you call it, ETF, and it holds future contracts. It holds GDX ETF, so it holds an ETF inside of an ETF. It's retarded. Um, and there's a couple other things that it holds. So like I'd say 60% of its portfolio is GDX, 20% is futures, another 20% is some other crap. And if it doesn't look like there's a lot of movement here, but check this out. Look at all the gaps. So I'm gonna draw you some gaps, and this is manipulation at its finest. Gap, gap. Oops. I mean, this shit is gapped up. Gap, gap, gap. There's one. Here's a big one. Here's one. Here's one. There's a couple right there that I drew out. There's some. I mean, it's all over the place, right? This is a way to see manipulation. When shit is gapping left and right, somebody's manipulating it, because it doesn't just, like, when stuff gaps, it's a massive movement in one direction, right? That's what a gap is. It moves massively in one direction, quickly outpaces the other side of the buyers or sellers. It outpaces the other end of the coin massively. And that's what gaps, that is what gaps are. And the more gaps you have, the more manipulated this thing gets. That's why you see, like, a lot of these stocks, a lot of them don't really have a lot of gaps. You'll see one here and there, one every 3 or 4 months, right? This one's gapping 4 or 5 times a month. It's ridiculous.
It's like payday, someone's payday.
Yeah. I mean, granted,
I don't see
pays
gaps. I see fraud. I see any payment.
Right. I mean, it pays a pretty decent premium. That's why I play it every once in a while. Like this 55p is probably money. It's not going back down to 55. Well, maybe it will. Let's see. It could actually. 50 is probably obviously the best spot, but the way this thing turns bear or bullish, break this top trend line. As soon as it breaks this trend line, you see though. Let me just get rid of all these.
That's a clean channel.
Oh yeah, this thing. Oh shit. I mean to do that. Easy to draw.
Can you backspace it, Control Z or something?
Doubt it.
So gaps, are they formed like pre and post market? Like, why do they happen? Because like you guys, or you share a lot about gaps and stuff, and I do see them and on the dailies and stuff. But are they because like during pre and post like extended hours, they're being shared, bought, sold? Is that why they gap, or is it during the day?
It depends. They'll gap any time of the day. To be honest with you, it didn't have to be pre-market, after hours, during market. It just gaps, right? So I think out of everything in the markets, like as a whole, gold and silver are manipulated the most. Because if you think about it, all the currencies in the world have devalued themselves 100 times over, right? But they can still relatively buy the same stuff. And the only way they can do that is because there's nothing uh, tied to like the US dollar, the euro, the Japanese yen, Chinese renminbi, whatever. There's nothing tied to that stuff. So they can manipulate it and inflate it and grow it, you know, without having a check and balance. But when gold was tied to the US dollar, they couldn't print money. So that's why they took it off, because they wanted to print and manipulate, right? Can't print money if the US dollar is tied to 1 ounce of silver. So like I think in 74 when Nixon took it off, it was like $35 per ounce of gold. Had the US dollar stayed on the gold standard, the dollar would still be able to buy the same stuff it did back then. But once they took it off, they devalued it so
Yeah.
much that now the dollar back then is worth 2 cents today, or a penny, or something like that. Like $100 back then is $1,000, or no, more than $1,000 today. Because if you think about it, silver or gold back then was $35 an ounce. Now you look at gold and it's $1,900 almost, or around 18. But look at how much people have printed their money and how slowly gold has moved. A matter of fact, pay attention to the last 2008 downturn when they did their first whole big stimulus thing with Bush, then Obama. They had multiple stimulus, and they had that quantitative easing where it was, 50 billion a month that they would put into the market or some crap, and they were just printing that money. Just hit enter on a keyboard at the bank and the Federal Reserve, and then they start printing. And excuse me, um, they can print so much money, and nothing's there to stop them, like the gold standard. That's why the gold standard was so um, highly respected, for lack of a better term, because it allowed it forced countries to balance their budgets. It forced countries to stop spending and spending and spending without worrying about going in debt, right? And that's what's happening today. Like, look at our country. It's gone so far into debt. I think we're at $28 trillion now, or some number that's like, I don't even think anybody understands. Man, I don't think anybody understands um, how much money is $1 trillion. Think of this: $1 billion. I could spend $1 million a day for 100 years and still have money with a billion. I think that's right. Let's see.
That's stupid money. Oh my
So
gosh.
let's say you lived 100 years times 365. That's 36,500 times a million. That's larger than I thought. So maybe not 100 years. I think it's like 80, maybe something like that. That was 36 billion. There's no way that's right. I can't remember where I saw that. $1 billion you could spend every day for a certain amount of time and never run out, or something. I can't remember. Maybe it was $1 trillion, actually. Maybe it was $1 trillion. I don't know, but it's just so much freaking money that, like, let me think of another example. Remember when Obama sent money to Iran and gave them $750 billion in cash? You know about that?
I did not.
Oh man, let's see if I can find a photo. sorry, 1.3 billion, not 700. I thought it was 700. Maybe I was thinking 700 million. It's 1.3 billion. It looks like, according to CNN. Just making fun of. Here you go. Pallets of cash. 1.3 billion dollars. That's how much that is. Imagine $1 trillion. Imagine trying to get $1 trillion onto a plane. You won't. It won't fit. You couldn't fit it on that big ass what's it called? The Romanov. The biggest plane in Russia. This thing, it won't fit on that. This is massive. Look at that thing. Antonov, that's what it is. Look at how massive this thing is. Oh, that's not the same. And it won't fit on that. No way. Might be able to get 5-10 billion on there. But a trillion is 999 plus billion. So yeah, they've definitely devalued the dollar so much that it's worthless, basically. I mean, had we had the gold standard, uh, gas would still be under $1, bread would still be a quarter, milk would still be a quarter, eggs would be a nickel, you know?
Hamburgers 25 cents.
Right? Exactly. But if you think about what does milk cost now? There's so many different types of freaking milk out there too, so that's really not the greatest
Too
example.
fucking much.
Right? Yeah. So there's like, so I buy my daughter whole milk, which is like this. It's like $5 a freaking quart. It's not even a gallon. What is it? Red. This one, Horizon 450, and it's a half a gallon. I buy that for my child because it's got the DHA and organic and all this crap. And then my milk costs about $3.25, so it's really not that much cheaper. And I get 2%, Lowe's or Harris Teeter brand. So it's not like I'm getting the the pet brand where it's like 450 for a gallon or some crazy crap. Um, how much difference in price is that? Or exponential increase in value from 25 cent, right? So 50 cent, that's 100%. 75, $1. Add the 4 quarters into there. Let's see. And then up to $3, add 4 more quarters. So I'm doing finger math. Add another $1.50. 17 times increase in price. It's massive. The dollar's been devalued so much that milk, I mean, it's insane. So, that's the thing about gold and silver. Definitely get out of that crap as soon as I'm able to. I will. I'm so tired of watching this crap just do this, man. Like, I mean, look at that, just down, 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 down. Right? I mean, since July. So again, I anticipate. See where we're at right now. Right now, we're here in time as far as the year goes. This is where we're at. So the next few months, I anticipate this exact same thing to happen right here. Right? I expect so I expect this section to start happening somewhere here. So
That'd be nice.
Yeah, tell me about it.
break that upper channel. And so yeah, I mean, no, I was gonna say, like, I was just trying to figure out, since you're already like in it, if the premiums were good, you could have definitely, racked in something and, covered calls and stuff like that. But I mean, you you probably don't want like more shares, so the CSPs won't help.
No.
But yeah, even 5 contracts, that's like what, $50. We saw 18 or something, so
25 grand.
100. Wow. Like, yeah, I mean, putting all that money just to make like, that little. And I mean, no, the cover call and the CSP method, the wheel and all that stuff is like amazing. But you're showing me again, or all of us, that it depends on what underlying, because not every thing has like solid premium, and that's crazy. About covered calls, if they're expiring soon, I know you mentioned the 20 to 50% profit target, but say that you did hold it till expiration, would you like, and then the stock lowered, would you go for a lower strike, or well, yeah, probably lower, that's more premium, but at the risk of it probably, like, it could blow past it. So what are your thoughts on it? Like, can we look at
I'd roll.
specific stock?
I
Yeah,
would roll it. I would
for the
try to
same
roll it
strike,
down.
or
No, I would roll it down strike.
oh, roll it down.
Yep.
But like, there's that risk of, obviously the market's going down right now. Oh, okay. Again, that falls with the whole sell at resistance then. Right now, and I had sold the 34, and now it's like 31. So it had hit 38 at one point, which I was like freaking out, I was sweating. But thankfully it shot back down. So I'm like, okay, let's do another weekly. But I wasn't sure if I should have done it, if I should do it closer to the money, or if I should
Which
still
ticker?
do SPWR. It was my practice run.
So you're talking about CSPs?
No, covered calls.
Gotcha. So, had this, man, I don't wow, damn throat. Had this kept going, you would want to roll up that strike.
Yeah.
You would want to try to roll that covered call, up and up and up until you can't anymore, right? And the scenario here is, let's say it's expiration day, right? Around expiration day, you could most likely come here and roll it. And you want, let's say your strike is 30, you said 34. You could probably roll down. I mean, like, so the way I do it, the way I did it with Nug T, for example, I was in a, here, let me just show that, since I can tell you exactly what I did with Nug T when I was in it. Where are we at? It was this. Yeah. Okay, so I was in here at the 72 and a half, right? And it just kept dropping. I'm like, shit, man. And I was like, I think I got like a $300 premium on that, and it just kept dropping. So I think it was a 1 week contract. I rolled it out to the following week, and then and I took in a credit, but I had to get it on a pump. Right? See all these little green candles here? I had to get it on one of those. I'm pretty sure it was this one right here. So theta had decayed. I got it on a pump. Yeah. So price is 60, 68 and change. I rolled it there, and I was able to roll my 71, 72 strike down to the 71. And I took in like a $70, $75 premium. So I made my $300 premium to 375, right? And then again, boom, it tanked down to 63. I'm like, shit, man. And then it jumped back up right here to 69. I exited that position and I made money. I made like $125. So you can tell, you can see here that even though it went against me and I was able to roll it for credit, that's the beauty. When you roll for credit, you really expand the room for profit, right? It grows it very nicely, I might add, especially if you get, you know, 20% at least on a roll credit. You're going to see a nice. If that thing pumps in the next 2 or 3 days, you're gonna see profit, and that's what happened to me. I thought about getting back in at the 60. I thought 60, I mean, like right here, you know, the 60 is a really strong, looks like it at least. Here, right there. So you can see the 60 looks pretty strong, right? You got some points here, there, and then obviously this one right here that bounced. I'm like, yeah, if it gets back down to 60, I'm gonna get it again. Well, it gapped past 60 downward, and I'm like, I don't like that. Jump back up, and then just got crushed down to 50. So I'm like, you know, this thing is just following this channel, man. And I've had this channel drawn for a while. You know, I drew it. So as you can tell, like when I can right click here and I can do extend to the right. Well, there is no right because I already did it. I think this one I can though. No, I already did it too. But you can see this is extend to the left. So I mean, boom. See, but I drew this back in October because I wanted to use NUGT as the way Phase uses TNA, right? And I thought, all right, I'm gonna wait till it hits the support level right here because I know it will. It's gold and silver. It's manipulated and it's being driven down, right? So I knew it was gonna come down to this level somewhere, but I'm like, well, we gapped right here, right? You know, I like gaps. Let me get rid of this. I'm gonna show you this gap right here. Nope, is that it? This one. That gap. Right. This is where I got in. Right here. Somewhere right here. $72. Right, so it had that gap. I'm like, sweet, it filled the gap. It's near that support line. I'm gonna get in. Because look, again, you know, we're talking about trend. Check this out.
Oh man, that looks clean.
Right? Higher highs, higher lows, higher high, higher low, higher high, higher low. Right? That I had that drawn too. And I'm like, sweet, I'm about to get this thing right, just right here at this trend line. Big mistake. But I was able to manage it and massage it to get out of it with profit.
That was a CSP or a covered call? Sorry.
CSP.
Okay, got it.
I don't want to own shares of ETFs. Never. Only PSILV. I'm very comfortable with PSILV, but like SLV, gold. Well, gold's a minor, not an ETF. Silver is a minor. Or I'm sorry, silver is an ETF. Silver for me is like I wanted to quick flip it, and it's just been going down, right? I mean, like I said, I'm in profit right now on silver, but it's not a lot. Let's see. What's my profit on silver? Like I said, $50. Yep, 49 and some change. It's not much, right? And I've been sitting here for shit. When did I get in this thing? Bag holder of the century. My first set of shares I bought on the 11th of August. 11th of August. And I bought high because I was bullish, right? Just like I said about gold, I bought it. I'm thinking this shit's going to keep going. Or I'm sorry, I didn't sell it because I'm like, it's going to keep going and I'm going to make bank. More bank. I got greedy and it turned and burned, right? So, and I've got like 2,500 in this thing. So it'd be nice to be able to get out of that and use that for like partially for a CSP. I think honestly with Fastly, my FSLY that I like a lot, I'm considering going pretty heavy on that with shares and just selling CCs on it until it hits $100. Make 3 grand off of, each 100 shares. My account can probably accommodate 3 or 4 contracts, so that's 300 or 400 shares. If I could ride that and make 3,000 off each just on the shares, we're looking at 12 grand plus all the premium that I'm going to get through it. So if you can find a really amazing stock, like just phenomenal, that pays great premium, I think it's really not a bad idea to throw a substantial amount of cash at that in shares and just sell covered calls on. If you can get the shares at a support level, nice low level, right? I think that's a really great way to um, continuously build your account safely. You just own the shares and get out $100, 105, because that's my profit target, 105. So we're talking 35, yeah, 3,000 just off the shares. And if I flip this, twice a week or once a week, and make $200-300 off it each time, or 400, I mean, damn, how long does it take for Fastly to move up to that? How long did it take last time? This is another way to. This is one thing that I do that honestly I really haven't told anybody about, but not that I don't want to tell them, I just never really talk about it. I don't know why, but I look at. So you look at all these movements. Get rid of this. Get rid of that too. So what's the time frame in here? What's this time frame? There. What's this time frame? All right, what's this time frame? What's this one? So we got here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 20, 2, 3, 4, 5, 6, 7, 8, 9, 30, 1, 2, 3, 4, 5, 6, 37 roughly. So 13, 13, 37. This one looks a little bit longer. 5, 6, 7, 8, 9, 10, 11, 12, 1, 2, 3, 4, 5, 6, 7, 8, 9, 30, 1, 2, 3, 4, 5, 6, 7, 8, 9, 41. So 13, 13, 37, 41. Let me write this down before I forget. 13 plus 13 plus 37 plus 41 plus 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5, 6, 7. Plus 27 divided by 1, 2, 3, 4, 5. An average of 26 days for this thing to go from top to bottom. I'm sorry, from bottom to top. Right? So, that being said, let's count. Actually, let's do this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3. Well, we've got 3. Let's do that for now. Fix this thing so I can Okay, so what did I say? 26. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 18, 20, 1, 2, 3, 4, 5, 6. Let's go to 7. That's when I expect this thing to hit the top of its mark and then start coming back down. It's an average, right? Average number. You get 3 time frames that are relatively short and the 2 time frames that are fairly long. So an average somewhere in here. I'm thinking we're going to see this thing right at about $100. And that's the other thing. You can look at like deviation channels, right? My deviation channels for this is perfect. This is between the 1. This is like a 1.5. This is a 2.5. This is a straight up 2, 2 here, 2 there. This one's 3. Sorry, yeah, 3. So let's see. Yeah, 3, and then so, hold on, give me a second. 6, 7, 8, 9. 3.6 is my average movement here as far as deviations. So 1, 2, 3. Somewhere here. Somewhere there. Wait, no, I don't want to do that. Six. 1, 2, 3. This is my expectation of this before it falls again. All right, so this is kind of an average between time frame from top to bottom, average of rise and from top to bottom, right? This is my average. You get how I got that? I mean, this is one way that I've always tried to analyze things and get some sort of time frame on this. And I chose the 180 because within a 6-month time frame, you can see how many movements there are, right? And I don't generally go out a year unless I'm looking for gaps. Right? You got one right here. Oh, that's why I changed it. Time axis. Yeah, so I mean, we got a gap right here that should be getting filled pretty soon. You see how it filled this gap, right? This huge, monstrous gap. Definitely filled that. If I ever see this happen on Fastly and then it's followed by some red, that right there is like instantaneous, guaranteed gonna fill. Like, look, did it here? Gap filled, gap filled. Right? I got this gap here. It definitely gonna fill that. There's a really small one right here as well. The small ones tend to get filled pretty easily as well. I mean, it's really not hard for a small gap to get filled versus one of these big ones. Yeah, gaps get filled. Well, if anybody has any more questions, please ask because I'm getting ready to end this shortly.
Thanks, Hostel.
You're welcome. I see it's only
And-
just a few of us here, but you know.
And for showing us your magic 8-ball.
Yeah. Yeah, I don't mind, like I said, it don't matter how many people's in here, 5, 2, 3. If there's people asking questions, I don't mind sticking around answering. But yeah, this is another reason why I don't show this to everybody, because it's there's a lot of stuff that goes into it as far as math. Well, it's not really a lot, it's just a little tedious, I guess. And this is something that I kind of made up on my own. It wasn't really something that I learned somewhere or saw someone do. I just kind of, I know math is a pretty solid thing to have as far as reliability. So when I'm able to incorporate math into something like this, it generally is fairly accurate as far as the averaging of time frames and the movement based off of stuff in history. The only thing I don't like about the stock is it's just really new, but they've already got a lot of contracts with the government and private companies, so they've got a pretty good solid footing on their business. So that's why I'm down for holding things if their fundamentals stand. Well, I'm gonna go to bed, but it's a pleasure to have you guys here and gals, Ashley. Um, hope y'all have a good rest of the night.
Thanks, you too.